if you want to trade that way. Secondly, I have already, while I was on the plane, I reviewed everyone's journal. Catch up on me being on vacation and everything. Writing the next set of homework for you guys, but I have yet to receive a single person's trade plan. So there's no reason for me to give you guys more homework if I don't even get that down, right? And it's been what, a week and a half?
Yeah, that's right.
Yeah. So I'm not gonna push that out.
I have it. I've done it a long time ago. I mean, if you want, I can send it to you.
Yeah, well, no one sent it to me, so I mean, if you don't want to send it to me, that's perfectly fine. But you have to let me know you've completed it at the very least, so I can release the next set. And it's very evident if you do or do not have a trade plan down, and maybe it's a little bit too much work or something, and that's fine too, but it's only for like your development and something I was telling some of the guys in here. I got approached by an old trader friend about wanting to start this like real life course thing or whatever, and I was telling him what I was doing with you guys. He asked me already to do it, and then I told him about what I was doing with you guys, and the shit that he's like, holy shit, that's like way more advanced than he was thinking about providing for people. But anyways, what I'm trying to get at is this is all for you guys' benefits. I don't know why else no one else got it or gave it to me, or maybe they've done it too and they just didn't send it to me. I don't know. I'm just saying I haven't received a single one.
Zero.
Yeah.
For me, this is my, what do you call it? What do you call that thing at the end of the PhD?
Dissertation.
Yeah, and it doesn't just happen in a week and a half.
Okay, that's fine.
I am working on it. It's like I just said.
Okay.
I'm really trying to,
put thought into it.
I wait for the top and then I buy it. I can send that to you.
Okay. If you guys feel like you guys need more time on it, that's fine. I just haven't heard
You've been gone. Don't be a fucking dick, man. You've been gone for a lot of this time here as well, right?
I've been gone for 7 trading days or less.
Okay.
Yeah.
7, exactly.
Okay, so sure, I've been gone for 7 trading days, but at the same time, I've been gone on vacation, but that doesn't mean I'm not there.
Oh, I get it. We get
Yeah.
it.
So when you say that
I need more time.
Yeah, but so that's not relevant to me though, right? I'm just saying, like, I don't know what that has to do with me. If you guys need more time, say something. That's it. I think it's fair, isn't? Or unless I'm being unfair or unreasonable, let me know. But I just haven't heard anything.
I think I mentioned that I had it.
You say you did one long time ago, but it wasn't within. I didn't send out my format yet, so after sending it out, I'm assuming you guys are doing something, whatever. But which is fine. Again, I just didn't get any feedback whatsoever. It wasn't even like, yes, I'll do it, or I'm working on it. It was just silence. I don't even think I got people saying, I don't know. I think it was like 3 people that high-fived that shit, and then that was about it. I don't know. I mean, is it? I don't know. You guys tell me. I'm not here to bitch about it. I'm just saying I have homework for you guys. I just wanted to see the trade plan first.
Okay, so I'll send it to you.
Yeah.
Yeah, I'm still kind of working on mine, so I don't think I'm ready for the next homework yet.
Okay, that's fine. It's not about getting it. Like, I'm not bitching about you guys about not receiving it. I'm bitching about not hearing anything about it. That's all. anyhow, you guys all do have homework, but yeah, I'll wait. Unless you guys want it now, you know, it's not too crazy, I guess.
No, not at all.
Yeah. Imperator, if you're developing a trade plan around mine levels, that's fine, and you haven't had much areas to test it. That's okay. It's just a hypothesis, right? You're just running a hypothesis out as of now. So maybe we shouldn't call it trade plan. It's more of a hypothesis as to how and what you want to trade when it gets to a certain level, and then you just write it all out. And then we can, go through it together. So if it's around my levels, that's fine. But what are you looking for within that action?
Yeah, I think he's asking for the nuances of how you determine taking a trade and what are the criteria to enter.
Well, if you're asking what I do it based on, when it approaches a level, are other things approaching a level at the same time, and what is the capital flow telling me? So if you're asking me that, if that's what you're asking, that's what I do. So it's based on price action, capital flow, and if multiple assets are hitting multiple levels at once. That's what I personally do. Yeah. It's a constant work in progress in Imperator. So, you can say like based on price action, for instance, right? Based on price action, and if solely on ES, based on price action, if it tests this level and then gives me a reversal, I'll take it to, the next level or something like that. But it has to be, let's just say, overextended on the day or whatever it may be. And then you can, it's, I understand what you mean. It's just a hypothesis of what you feel could happen that day. Or just a hypothesis period as to what you're looking for. But I mean, if you guys need more time, that's fine. I'm fine with, needing more time. So, anyhow, is there anything else you guys want to talk about as far as like, I don't know, the markets, you guys, possibly not understanding certain things that I'm throwing out there, whether it's levels, like maybe, I understand that me just throwing out levels is not the easiest thing for you guys to just trade, which is why we have green light, red light now. And I didn't track every single one of them, but based on if it gets there with a good reversal plan, or action, and with good trade planning, I mean, it seems like, I think there's like 1 or 2 losers out of all that I put out, that I took, out of, I don't know, 8, 9, 10 of them. So
can you talk about how you come up with those areas?
Those are just the same way I calculate major levels, but just on a minuscule, time frame. Which
Okay, so
it's
not more of a like price action.
No. So a lot of this is like, the only reason I'm doing green light, red light for you guys right now is because I'm even taking the whole trade plan out, right? Like, let's just say, like, maybe, and I'm not saying you guys are I'm not saying all of you guys are, but let's just say someone's struggling with it, struggling with like a trade plan or a trade idea or something with positive EV. This is an opportunity to see if you can, get in at a decent price and manage the trade. So it's kind of like, we're testing each and every single one of the skill sets that is needed to be a trader to see what it is that is hurting you the most. If it's not reading price action correctly, that's something we can talk about. Market structure, we can talk about that. If it's trade management, we can talk about that, for each and every single individual. So whoever's taking this, I would love to know this. And one of the reasons was like, I'm not really sure who's taking this. And if you are taking it, I kind of want you guys to put a note within your journal to say, you can just put like, GL, RL or some shit like that in caps. So I know that, okay, he took this. Let me focus a little bit more as to what he was looking at, why he entered at this price, and, why he didn't maximize it, or maybe he maximized it even better, and find out why. Like I'm trying to chop down everything. It's like troubleshooting a computer. You got to take components out, and replace them with a new one, and back and forth, just to a point where it's like, oh, I see what the issue was. It was a power supply that was an issue, or it was, the RAM that was the issue, right? So I'm trying to figure out what it is that is hurting someone right now. Like Peter right now, like, you didn't know the trade plan, but you traded the plan. You didn't go to the target, which is fine too, because you didn't know the target, but you had your own targets, and then you recognized that, oh, and you admitted that it was a trade management issue,
Yes, and partially, like we talked about, partially, I mean, when you just look at this, then, it looks like, my idea was we're gonna sell off, but anything can happen, especially with quad witching, Friday, long weekend. So I'm like, maybe after this thing happened. And I think you mentioned that you took most of your, because I remember you sold, and I think you closed most of your position. I think over here you had one contract left.
Mm-hmm.
Yeah. So, and I think you were aiming for lower, and that also, like, I heard you say that. I'm like, oh shit. And then we came up all the way here. I'm like, okay, so looks like we might be ranging, and so that's why I moved those targets. Actually, no, one was like lower, 41. Oh, wait a minute. I think this one. So I had these two targets, 1, 2, and 3 at 41. So I just moved them up closer because I thought, like, just might that. Oh, another thing was on TPO, which I'm looking at also. We formed, like, right here. We formed like almost. It wasn't poor high because we had these prints, but we built up. So it was like a ledge, and a lot of the times those get broken. So that's another thing that I don't really look at that, but that was like when the price came up here, almost stopped me out, and so then I saw it and I'm like, okay, maybe we're correct.
Yeah, I understand. And the thing about that mindset, and sometimes I struggle with that too, right, is that if you look at your potential loss, and this is the reason why the journal is the way it is, if you look at the 3 trades you took, right, your potential loss is $387.50, right? Your profit off those 3 trades, was $158.75. Now, of course, your last trade won, but your last trade didn't even meet that $387.50, let alone double it. So, and again, we all have this issue. Every single one of us, right? I'm just letting you know that in the long run, that is negative EV. You made money, sure, but in the long run, that's going to cause a lot of heartache, right?
Yeah.
I mean, that's why the potential loss is there.
Yeah, and the thing is, like, I have to learn to, cause see what sort of, all the things that I mentioned before, quad witching and this and that, and also previous trades that made me do this. What I mean, not the trades, it's my psychology, but that's what sort of influenced my decision to take my profits. And I need to learn to treat each trade on its own. Each trade is its own separate trade, not look at these two losers, and I gotta get back to break even. In the long run, if I stick to my targets and my trade plan, and I've noticed that most of the time it works. Like on the day before on Russell, the only target I moved was this, because it was a bit higher and it was end of day, so I just moved it. But on this day I stuck to my guns and I didn't move it. I was contemplating to move because my stop was below here, I think. Yeah. And I was contemplating to move my stop to break even, and good thing I didn't. And I told myself, nope, everything was going up. I'm like, Russell was the only one struggling. NQ and ES were going up. I'm like, that should follow, hopefully. And all those targets, they were hit. I didn't move them. Like even here, I didn't move it closer because I was, I'm like, okay, I'll leave it and see where we go. And then it played out.
Okay.
Yeah, except for the last one, because we were. So one
close
question.
to the end of the day, right?
Yeah. Can we go past 3 o'clock?
You can, but don't do it.
Yeah.
You can by like a minute or something, but
okay.
I think even some give like 5 minutes or 14 minutes, but don't do it. Just cut it off. I would say cut it off before even then.
Yeah. So I closed it.
Yeah.
At, just a minute before the close.
Right.
So here I stuck to my plan, but here I probably would have also, if it wasn't for those two losers, or maybe one, then I'd probably stick with it.
Okay. Can you zoom in again on that, on the first 2-3 entries? So here's the thing, for me, is that your first, from what I read, right, your first one that you took, your stop is in the middle of nowhere.
Yeah, it was behind this.
Yeah.
This pivot.
Correct. So your second one was the correct stop, in my opinion, right? And that's fine. Like, if you get stopped out, you get stopped out, and that changes everything. Your EV, everything. I understand you want to take each trade as its own. The only thing I would say, be careful of that, is because you're going to see something very, very different. Because if you just take each trade as its own, you're going to see, the one that you actually won, you risked 162, but you won 83. So you're thinking, okay, so I have like a 2 point something, 2.5, 2.3 risk to reward. You don't. You get what I'm saying?
Yeah.
Because all three were the same trade idea. right?
Yes.
Yeah. So let's just say, your second one, right? So 41, 825 minus 44.94 times 50. So let's just say you took your second one and you placed it at, that high, and you got stopped out and you got right back in. I think even your third one, even though you got a really good price, I think that was a little bit too early. But let's just say you got in, much later, right? And you just kept your stop there and you just let it run. I think your EV would have improved drastically just based on your first one stop in the middle of nowhere, and then you enter too fast on your second one, right? It's like,
yes, but I just saw that okay, we broke these pivots and we might go for going for back and fill. I mean, even if I entered like here, probably would still get stopped. But
no, I completely agree with you. Like, I completely agree with you that you would have gotten stopped because I got stopped, right? Like, that's like, it's perfectly fine. It's just about your first entry getting stopped, and then instead of just sitting back waiting, you just got right back in, which, to me, and you can correct me if I'm wrong, it almost seems like you're a little bit like, shit, I know my stop is in the middle of nowhere and this can still turn.
Yeah, it was a bit of FOMO. Like I saw this setup, was waiting for it, and I didn't want it to go without me.
Yeah, and I think at that time you wait for it to crack, like 44.75 area, and then get right back in on the pull, rather than in, stopped out, in again, stopped out. Because your first in, let's just say, fine, whatever the reason is, you got in, your stop was, in the middle of nowhere, and then that big bar, this is what, a minute bar. I mean, it didn't even show anything. You know what I'm saying? Like, you could have sat back and just waited, be like, all right, was I wrong? Was this a bad read? Let's wait. Instead of saying, this is still good, let me get back in, say, I'm gonna wait for the price action, to tell me what's gonna happen. And once it cracks it, you get back right in the pullback. So let's just say at 957 or 947 where it cracks down, right? Let's just say you didn't get in your second one or your third one. It cracks down at 947, that area, and it pulls back. You get in and your stops above the high, right? Above that high, yeah. I know that's a big high, but still, you get in at 957 or so. Yeah, right there. Because it cracks your first, it cracks that again, and it's a good pullback. Your stop's above, your original stop. You just let it run. I think that's more fair than, systematically speaking, that's more fair than, getting in right after you get stopped out, and, and trying to hammer it. Because things like that, you're going to incur like 2-3 stop losses, because, you are catching a flying knife at that point. You know what I'm saying?
Mm-hmm.
Because nothing is telling you this is, it's the same thing as if you're buying this all the time, and it just keeps on dropping lower and lower, and you just keep on buying and buying. It's like, wait a minute, it hasn't shown me anything, so I think a more fair entry based on your time frame right now will be at 957 after it cracks, after your first entry, you get into 957 right there. Yeah, it cracks multiple legs and then gets back in and tests it. I understand. After that, I completely understand why you're, once it double topped, you're a little bit like, shit, I want to get out. And there's multiple factors as to why I got out, right? One is NQ, and two is because, I'm on vacation. I'm going to go fucking have some fun. But, it's completely up to you how you want to, manage it. You have to ask yourself, it's like, well, if I'm going to get out, after your risk mitigation, you got out one there because you explained it already to me, and that makes perfect sense because essentially double bottoming, it makes complete sense. But then your third out didn't make too much sense in my eyes, right? Reason being is because it already the one before that.
This?
Yes, because price action wise, it broke it made a line break, and then it retested, and then it went down. You just got out on the line break. Do you see that?
Yeah.
Right.
I was just at this point. I thought that we might, retest somewhere, and just go higher. So that's why I'm like, okay, let's just take a little bit off and
scroll down just a tad. Push it down just a tad.
Down?
No, yeah, but sorry, up. I'm gonna draw on your. Okay, stop. Okay. Hold on, give me a second. Let me draw this. So, boom, boom. That up. Good retrace. Yeah, something like that. And then that's not a good retrace. All right. So let me copy this, send it in the room. I know it's a little shitty drawing, but follow that line. The red line. So that's essentially what happened, is that's what I'm looking at. I'm like, wait a minute, why are you taking it out there? Whereas I'd much rather have you put your stop loss, let's just say above 1201's high or some shit like that, right? Yeah, right there, 1206 high. Yeah, or something like that, or even just leave it at the high and see what happens. Because right now they're giving you the price action for it to go lower. I understand that you are scared of that double top. Completely understand that. If your 2, 3, your fourth take made more sense than your third take. So do you go to your fourth? Yeah, that one makes a lot more sense than your third take. I don't know if you took it off because of VWAP, because I can see VWAP there.
I think this one might have been either
like
this
a low
or
volume node.
VWAP. I think that might have been it. We might test VWAP and continue, because at this point I noticed like almost poor high, a ledge on TPO, and I thought that we might come test it. And I mean, to tell you the truth, I don't really know. Was it VWAP? Because I know VWAP, if it's like this on a day like this, I know it doesn't get tested. Really, it doesn't get respected. You can call it, okay, we bounced it here, but really no. The way I look at it, if there is a day and we, let's say, sell off and we bounce off of it, then there is something to it. But on a day like today, we just chop through it and I don't really pay attention to it. Might have been maybe VWAP or point of control. So this one was probably point of control. At this point I was like, okay, I would like to finish green for the day and get a little bit of profits.
Understood.
Because from here, even with the 3 contracts, I was, I think, like 20 points up after all this. At this time, I was 20 points up, and with 3 contracts left, 4.5 points stop, then I would be, with all the commissions, I would be probably slightly negative for the day. So that's what was going through my mind. And the thing what I said about I understand why you're saying that if those three trades are same idea, then I have to look at them, and I do, because if I have a setup, um, then I look for a win rate on a specific setup, not overall. So these, I would look at these like, okay, what's the win rate for this setup? So including this, and that. But what I meant to look at each trade individually is like, I cannot be scared because I took one or two losers, and this trade is its own trade. Even though it's the same setup, I know what you mean, but it's.
I see what you mean. You got to forget about the two losers and trade this.
Yeah,
and
exactly.
Make this.
Like,
yes,
even,
I agree.
Like, if my plan was even to take just this on all the contracts, I should take it, be okay, and not try to extend my targets, or like even, I gotta be positive, 500 for the day. I'll move these targets that I had in mind, move them all the way down because I want to be positive for the day. So that's what I mean,
Yep, that makes complete sense. Yes.
Like,
you need to have short-term memory and forget about that and just trade the best you can with this. I agree.
Yes, and
100%.
Don't try to, like I said, if your idea is to trade plan is take 5 points, but because I had two losers, okay, I'll extend to 10 points because now I have to make those up, then it's not gonna work. Because if your setup is like, 5 points works for you, let's say, like, numbers has it all planned out, and like he takes this much because he ran it through, and now because of the losers I'm gonna take 10-15 points just to break even for the day. It's not gonna work in the long run.
Absolutely.
So that's what I meant, to treat each trade by itself, on its own.
I agree. 100% agree.
Yeah,
it's just that
I messed up on
yeah, if you're gonna take 5 points, you should definitely take 5 points. Like if that's your trade plan. Agreed. But if you're only taking 5 points, I would say don't even take 3 shots at it.
Oh no, it would have to be a much higher win rate.
You're right. So okay, agreed. Okay. Does anyone else have anything that you guys want to talk about? Because I know FatCat's gonna jump on shortly or something. Is he back, Harvey, or what's going on?
Sorry about that. I don't know. He is an elusive animal.
What do you mean? I mean, it sounds like you're talking to him on the side, so.
I am, but I mean, he's an elusive person. Like, he's an elusive person. So anyway, what I did have is that he's probably not going to jump on Discord with this. I actually told him, I said, think about this. You should put this on YouTube to get the hits. Or whatever, the views, honestly.
Oh, so he's doing this Q&A and then recording it and putting it on YouTube? Is that what you're saying?
I think it would be like a live stream. So then, because I was just thinking about it, you know what bothers him the most is when a bunch of people fucking overtalk or whatever. And I was like, because if you read my thing, it was supposed to just be for you guys.
Who's you guys?
Your group, the WikiWoo, whatever, Zero's group.
Oh, I didn't know that. Okay, I did read what you said.
I wrote it to him, and I was like, look, if you're not doing anything on Monday, let's do like a little Q&A for the WikiWoo group, like Zero's group. Mm-hmm. He was like, sure, sounds good. And then I come in, and I'm like, and he's like, oh yeah, everybody, I'm gonna do this thing. I'm like, oh shit, that's gonna, I don't know, that might piss him off, right? So, kind of like, everybody wants him to come back, right? So I don't want to like. I don't know. The one that,
I didn't know the backstory. That's why I was confused.
He's a sensitive person. He gets pissed off really fucking easy, it seems.
Okay. So, I mean, again, I didn't know the backstory, so I didn't know what you meant by it. But okay, that's fine. I mean, whatever you want.
Yeah, like I was like, hey man, like and to be honest with you, I was trying to be selfish.
Why?
Answer a bunch of my questions that I've actually I've tried to ask him. Then I've ended up actually deleting the questions out of the main chat during a stream.
Yeah.
Because they're a little too deep. Hey, Zero, how do you build your major levels? Right? Like, they're not, like, it's like, I'm not, I was going to get you guys to get a little sneak peek of the course and a little bit of the fucking secret sauce, basically, with my questions. Like I wrote, I've been watching this guy for a long time, and I've got questions that are way deeper than, hey, what is volume profile high? Like,
yeah, I don't know his secret sauce, obviously, and he doesn't know mine, right?
I don't know it either. That's why I was going to ask him the questions.
Yeah, I don't.
Hopefully, he would answer them in front of only you guys, because I feel like he won't answer the real nitty gritty questions in front of like a whole bunch of like. Why?
Agreed. Yeah.
Right?
Yeah.
Why would you? So I thought maybe we could get him a little bit more opened up with the smaller group. He maybe he knows what I'm up to.
I don't even think he would do it in here, to be honest.
I don't know if he might know what I'm up to, right? Because I have some pretty good questions that are completely nuanced. Then I'll have to wait for the fucking course. And then he probably won't even. You know what? You know how some of these courses are. It'll be like, not quite, just almost, but not quite.
I don't know. Possibly. I don't know what his idea is. I mean, the last I talked to him, I didn't know he was coming back.
I didn't either. I actually had no idea, and then all of a sudden
here I am.
Back a bit. Yeah, exactly. Like, I don't know. So I didn't want to push him over the edge of. That's why I told him. I said, look, you should probably put that in the YouTube. Plus, you get the fucking hits. What the fuck, right? Like, or the views or whatever.
If he's gonna do it public, why not?
That's what that's exactly my point.
I don't know what people are gonna ask him. I
have no idea, and I'm gonna probably stay out of the question asking.
Yeah.
You know what I mean? Like, I'll ask him some questions to keep the ball rolling, but I'm not gonna be asking him the list of like the questions that I have.
Okay.
Again, it's just like, hey, Zero, what are the major levels? Like, how do you do? Well, exactly. Tell me exactly. No, it's step by step.
Didn't you and Retro?
I want you to write it down and then show me, and then we'll go over it 5 times, and then that'll be perfect.
Retro tried to guess it.
Yes, that's a different.
Didn't you try to guess it too?
That's a good word. Yeah, well, I gave up on that. Fuck.
And she's all like, "It's fibs." I was like, "No."
Oh,
I was like, "No."
A little bit of column A. It's a little bit of column B.
Yeah. I don't know. I think that you guys should join and ask him questions.
I talked him into this, so actually we didn't have to leave.
Right.
Again,
I don't.
Centered.
Well, I mean,
selfish. We don't have to leave now. We could actually fire it up on another, another browser or whatever, and we don't have to leave.
No, I mean, if you guys want to go over there and ask questions.
There's nothing to go to though. It's just it's going to be a YouTube stream.
Oh, it's I thought he was going to be in.
Get the views on YouTube so you can get paid for it.
Okay, so he is going to do that. Okay.
Think so. Again, he's elusive. He goes, I write him that, and he goes, okay. I don't know what that means.
Because he said, he says Q&A, blah, 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 but I don't see a link.
No, I wrote him like by text message.
No, but he wrote it in ES text that you summoned him or some shit like that, but I don't see a link.
Yeah, it's probably too early. He's got another 30 minutes, he's right to the edge, right? But after watching Zero sometimes testing some of the major levels, you know what that calculation is? What is that?
I have no clue.
Wish I was smart enough to actually know that.
I typed in random complicated equation on the internet.
Oh, and it didn't give you like this is the formula for the speed of light or something.
That was actually crazy. Somebody made.
I don't know.
Somebody made a complicated equation generator, and you just say what number you want the answer to be, and I typed in like 900.
I don't even know how to do the brackets part. There's brackets inside of brackets inside of brackets, and then there's more brackets inside of those brackets.
Well, that part's
Let's divide those by Z. Oh, fuck, great.
It's whenever you get to that limb. I don't. Oh wait, I cannot. I think I do remember how to do that. I don't know.
I don't even know what LIM. I don't even know what that means.
I think you have to like solve it for
I
multiple
don't even
different. Like I think it is. You have to solve it for x equals 1, then x equals 2, up till 10. Maybe I don't remember. I know there's something like that somewhere.
Oh, I have. Am wow. So letting the other guy do this part. I'm fine with that.
That's not
Project.
sine, cosine.
Send that off to the other guy.
Yeah. Oh, I was wrong. I thought it was like sine, cosine, and tangents, but it's not.
The order?
No, because like I thought IN or LN or whatever was like some kind of like one of the sine, cosine or whatever that I learned in like statistics class a long time ago. I have no fucking clue what that is.
It's awesome.
Okay, let's focus on us real quick. Is the green light, red light helping at all, or is it not? Or do I need to do?
Again, maybe this last week or 2 weeks has been a little bit messed up because I don't know what numbers are what, right? Like which, if you maybe, I don't know. I guess I should have looked at the picture a little better. Does it have the? I see you're on a continuous contract on this last one.
Yeah, so
maybe I didn't take a note of that. Maybe I was kind of.
That's fair.
Still a little bit floored by the 6 different.
That's fair. That's
coming
fair.
at me, right?
That's
also
fair.
yeah. No, but before that, yeah, absolutely. I rolled back up and I was like, wait a second, yeah, this RTY one, it was good. This one was good. I was like, yeah, never mind.
The rest was good. NQ was good. ZB was really good. The 6.
No. So yeah, I have been watching them and I have been marking them.
Yeah. June 1st, Russell didn't pan out.
I mean, what kind of
Russell?
That's still pretty good.
Yeah. May 1st. May 30th. Sorry, that one worked out well. And then there's some in level Stratter too, so that worked out. Anyhow, if it's helping, I'll print it or I'll keep doing it. If it's not helping, then I don't want to like add shit to my plate.
I like it.
Just do the
a
ones
lot.
that are easy for you.
No, all of them are things I'm going to take. I'm just looking at it.
Keep posting.
None of them are like something that I'm like, maybe, like, but of course, yeah. Anyways, I mean, if it helps, I'll keep posting it. That's all.
Yeah,
it's
helping. Sometimes it just happens. Like at the hours that I'm not trading yet, or like bonds. I'm not set up for. I mean, I can trade bonds, but I, don't have it set up. And
I agree with you. I think the bonds one is. I probably won't be posting bonds. I'll probably be posting like.
No, I want you to post if it's not too much trouble. Post them. Because if anything, what I used to do with almost anybody was just to actually, like, if that's what you're taking, like even a live, like if it's a live trade, you're gonna take it. Even if it was after the fact, I looked at it and thought, what the fuck were they thinking? And they took that trade, right? Like, how were they coming up with this entry? Like way back when I started, right? Like I was just like, well, how did they do that? Like, what do you mean? Like, what made them think that they was? It helps me with the process of understanding what the fuck you're thinking.
Yeah. Okay, that's fair. It's just that I don't want you guys really taking the bonds just because the value is really high.
That's fine. If you want to exclude the bonds, but I mean the whole process, even if it was lean cattle, it's my decision to make a trade on lean cattle or not.
No. I'm only posting stuff
just saying, I want to see your process, right? Not your process, but like.
Yeah, what I'm
like,
thinking.
Oh fuck, he's looking at it there. Why am I not looking at it there? Right? Like that's what I'm kind of getting at, right?
Yeah, I'll be posting things that have micro abilities. So even if it's, I think I posted one for one of the currencies. I don't remember unless I just called it out. But Yeah, I'll post it for those. So it's gonna be crude, gold, all the indices, the currencies, and that's about it. You know, if I see one in that, then I'll post it. But if it's like, say for like the Nikkei, I'm not gonna post it. Nat gas, I'm not gonna post it. 10-year, 30-year, I'm probably not gonna post it. You know, wheat, I'm not gonna post that shit. You know, any of the grains, I'm not gonna post it. None of the cryptocurrencies, none of that.
The whole room, if anybody was gonna trade any of that, it would be me, and I doubt I would trade that.
Yeah. Okay.
It's just, it's a little bit next level shit, right?
Yeah. Let's see. 1 second.
Weed. Trade weed? Weed is good.
Weed or wheat?
Yeah, weed. Weed. Weed is a good idea. That's what Imperator just wrote. I agree. I like weed.
All right. Yeah. So I'll just keep on doing that then. I mean, if it's helping you guys, we'll keep on going at it and see how it goes. I mean, truthfully speaking, the best way to getting funded or improving right now that I'm seeing isn't actually the major levels for you guys. Truthfully speaking, I've been doing a lot of thinking about this because there's just way too much. It's just way too high of a time frame. That's one. For you guys, that's one. Two, it's, you know, I don't want to be a dick, but it's true. It's there's just, without understanding the sauce, the secret sauce, it's very difficult to trade it. You know, like Friday, I was, you know, for the most part out of this room because, you know, I have to be in my other room. We have to fucking verify all this shit, and you know, we're also trading at the same time and calling shit out and blah blah. And I actually fucked up a couple times. I was talking, you know, to someone else, and they're like, "Who are you talking to?" I'm like, "Oh fuck," you know, like, you know, I was afraid that they were gonna know. But you know, I think the best way is actually through the green light, red light, where I'm actually posting something that, you know, I was trying to avoid green light, red light, to be honest, for two reasons. One, you know, it's one thing to trade it live, it's another thing to like post to you guys what I'm gonna fucking do. And then secondly, I don't want you guys to be dependent on that. But I think, you know, when it comes to the green light, red light, if you're really, really getting success through that, then we can talk further about how the fucking to do it afterwards. But, you know, only if you're really successful with it, then it's like, okay, well, now it fucking makes sense. You know, like, you know, some of you guys don't know, but again, I've been approached like, hey, you know, like from that old trader friend, old trader friends. So like, you know, and one of them's wildly successful. The other one's successful in more than just trading, but his trading, I don't think he's that good at it. He's just, you know, won the ovarian lottery where he just has a shit ton of money, and he trades on the side. And you know, when you have deep fucking pockets, you can buy Tesla all goddamn day, or you know, even when it drops, you know, to 1/4 of its value, you can still keep on buying it and, you know, make good. You know, it's not a good idea. It's not a good trading system, but if you have deep enough fucking pockets, you can almost win in everything, especially when you're in the buy side and sell the sell side, right? So, you know, he was asking me about it, and I spit out this number of what I would really, really fucking charge someone if they were really like, hey, I want you to open up all your, you know, like you know, your secrets to me, right? And not only would I do that if that happened, which I don't intend to, but if it did, then I'll be like, I would show them all my broker statements, everything, right? Like, look, this is what you're getting. This is the idea. But what I'm trying to get at is this. If you are actually trading the green light, red light, and you're doing well at it, right? Like doing very well at it, then it's like, cool. I'm going to keep on giving it to you until you make fucking a lot of money. And then we can talk about, you know, how you're going to learn the system. after that point. And then at that point, it's more of a risk-free thing for you, if that makes sense to you guys. But, you know, again, this is way, way, way down the fucking road. Let's just focus on you guys getting better through either trade management, trade entries, or whatever it is, like reading the market. I much, you know, the whole WikiWoo thing isn't really for you guys to learn my style or to learn my secret. It's how can I help you? What are you struggling with? You know, it's more of that. Like, you know, if you're like Cosmo, who is a, you know, a scalper who's wanting to be like FatCat, great. How can I help you? Well, if you're learning to scalp things, I can't help you with that, but I can help you with the trade management side or reading the market side. So stuff like that, guys, if you guys know what I mean. It's not really like, you know, secret sauce stuff, right? Okay. Yeah, I mean, that was the idea of the WikiWoo.
Well,
Yeah, after
thank you for that. And you know, all your time and doing even the green light, red light, and all the time commitment and what you're coming up with, you know, duck list and trade plan, everything.
Yeah, I mean, you're welcome. I just want, you know, I do want you guys to succeed, with or without me. You know, if I can't help you succeed, I'm okay with that, guys. Like if FatCat or Tundra or you know, Trading Geek helps you, then do it. The Trading Geek was a joke thing, by the way. Anyways, Bayman, what were you gonna say?
I was just gonna say, I think after, I know the setups are not super plentiful, but I think after there are enough opportunities to try trading the red light, green light, I mean, honestly, you have it dumbed down enough to where I think any of us would be able to trade it well if we stuck to what you were trying to have us do, like entering on a pullback and having a whatever 5-point stop, because that seems to work. It's just a matter of making yourself do it.
Like stomaching that 5-point stop, right?
One more time.
Stomaching a 5-point stop.
Yes.
Like it's not easy to stomach a 5-point stop. I know. It was not easy for me to stomach it. But
like that trade that the picture you posted about that being the pullback to get in at with a 7-point stop. It worked. It worked. It was from your level.
And sometimes it's very difficult because, like, you know, I agree, man. It's like, but sometimes it's very difficult to like, just be like, it's difficult because we want to have small stop losses, but then if we're going to enter 3 or 4 times, you know, it all of a sudden becomes a 7-point stop or a 5-point stop, if not more. By the 3rd trade, you essentially have, you know, roughly, you know, about a 6-point stop or so. You know, for the most part, it's usually about a 6-point stop, if not more. I think the least is 6-point stop after the 3rd entry. So, you know, you have to ask yourself, it's like, well, if I'm entered 3 times, what's the difference in having it as a 6-point stop? Mm-hmm. Or 4 times, or 5 times, or fuck. I mean, some of us, including myself, sometimes we get so, you know, like you know, Bayman, you've told me, it's like, stop zeroing in on the line or level. It may or may not get there. We don't know. Yeah. So, you know, keep on hammering a trade idea is just as detrimental as having a bad trade idea. Or, you know, again, back to the whole thing. It could be trade management that's an issue. It could be reading the market that's an issue. It could be a lot of things, right? Entry issues. Yeah. So,
for me, so I'm doing 2 trade plans. One for your red light, green light. And
Good.
how I am counteracting that is I usually don't scale in. But I am starting to scale in, or at least that's how I'm going to try to trade it.
Okay.
And if I don't get all my contracts filled, it'll just be a little bit of profit, but that'll at least make me more comfortable putting a big old stop on it.
So you brought something up that's, really interesting, and also what, now that I know some of you guys want to do it, if you're trading the green light, red light thing, you can still have a trade plan around it, right? So the trade idea, sure, the exit is defined for you per se as your final target, but you can still within the trade plan describe what you want to see, for your entries. Like, what ducks do you want to see? Essentially, the trade entry is just your ducks in a sentence form, if you think about it, right? And then your trade management is something very, very different, because even though we have a target, again, there are many, I think 2 or 3 times where it didn't reach my target, but with good trade management, you should make good money. I remember one clearly that is in the green light, red light, or levels chart, I forget which one, but I posted it. It didn't get to my target, but just on 10 micros, based on management, I exceeded the day's max just on trade management alone. If you held 10 micros all the way to the target, which it never hit, sure, you wouldn't have made money, but if it came back against you. But what I'm trying to get at is, like, even with good trade management to that direction, you should be able to make money. And that one of them really kind of hit me, because, like, wait a minute, excuse me, I was like, wait a minute, it didn't even hit my target and I'm already at max. I was like, I need to get the fuck out. It was a gold trade, actually. I was like, shit, it went to the target, and it was going to a target, and I was like, fuck, we're maxed out. And it was like with good trade management, right? So anyways, so if you're going to trade the green light, red light, start defining how you want to manage that trade once you're in it. And that trade management should be a little bit shorter, because the exit doesn't have to be defined, like the final target doesn't have to be defined. It's just about the trade management and what you want to see as an entry. Anyone else? Because I think FatCat's going to be on, and I don't want to put you guys back on that.
No, I don't really have anything else. I'm sorry I have not been around, guys. I fell off a damn cliff last week, or a metaphorical cliff last week. I've just been in a funk and took a break.
It's okay. So, I actually read something recently, and not read. I watched something recently, and it was talking about alcohol. And I know I've talked to some of you guys about alcohol and stuff like that. It's like, I forgot his name. He's like a celebrity businessman, whatever. And he does very well. And he's talking about quitting alcohol. And the whole premise, and I'm not here preach, but I'm talking about my own, personal thing. Dave muted us. What I'm trying to get at is, what he said really hit me. He only has about 2 to 3 drinks a day. Sure, he still wakes up a little bit woozy or whatever. But his question that he was on a podcast, he was like, he wonders, despite him being successful, he wonders how much more successful he could be without alcohol. And without certain vices, right? Whether it's cocaine or whatever the fuck it is, because a lot of them are talking about. So it made me think, it's like, I wonder, just out of curiosity, like, what would happen if I just quit drinking? I want to know what would happen.
Anything positive, like...
Yeah, I don't see anything negative, right? What were you saying, Beeman?
I was doing good for a couple weeks, and then like last week, I don't know.
I mean, we're all semi, we're all semi like alcoholics or whatever, right? Like I don't want to say alcoholics, but like we're semi like really addicted to it, and I'll probably be the first. I mean, I drank a lot when I went back home, but it just hit me. It's like, I want to know what my trading, what my relationship, what my health, what my body would be like if I just didn't drink, and I get what you mean, Chia, like about, missing out with friends, like I told my wife, sorry.
You're talking about he's going out, I drink like once a week. That's not
Chia drinks.
Like, that's almost that. I would love to get to that level.
Yeah, I'm kind of about like nightly for no reason. Like,
yeah, I think I had one sober night since I've been gone. Well, 2 sober nights. Or was it 3? I don't remember. But the point is, I drink a lot, and to a point where it's even now I'm sitting back and just reflecting. I was like, fuck, And I was sitting on the plane, and it was like free alcohol, and I was like, I really could right now, and I don't have to trade, when I get back, and it's a weekday or a weekend, right? Like a holiday. It's like, nah, fuck it. I don't want to drink. Like, I'm just going to see what happens. Now, I'm not saying that I'm going to just stop drinking forever. Like, I told my wife, I'm not going to stop drinking forever. Like, I still enjoy drinking with my friends, everything, but I want to make sure I have 2 days, at least 2 days if I'm drinking heavy, to clear my mind before work. And even then, I don't really want to, pound it, right? So, how many times on average do you guys drink a week?
You're
6 to 7. Why?
I was actually thinking about that like all last week. It's like, how many days of my life have I wasted almost?
Yeah.
Being hungover, right? It's the hungover part, right?
Yeah,
and
yeah.
I'd say, what the fuck was it worth for that the last 4 hours of the night, 9 o'clock? Like for me, it's from like 9 o'clock till 1 o'clock or whatever at night. I just traded a whole day for that 5 hours or 4 hours of whatever. Really, and what did I accomplish during that 4 or 5 hours of whatever? I don't even fucking remember the tail end of it. Fuck, man, it was, although I, trust me, yeah, like, it's not like I completely out of it. It's just, the next day it was like, I don't even really recognize what you even were saying. Although, like, during the time, you're probably perfectly coherent to the person you're talking to, but sometimes you're not, right? So...
Yeah, I mean, it's like, was that last 5 drinks or 4 drinks really worth it to feel like shit the next day? And was the conversation so great that you needed the extra 4, 5, 6, whatever,
what
right?
I've actually started to do was like, okay, so I have a problem. It's not, so frequency is a thing, and I've tried to work on that. That seems to be very difficult. But what I actually thought was, well, why don't we just try and lower the volume first, and then we'll go with and then once we've lowered the volume, it's the same way I quit smoking cigarettes. Right? So you lower the volume, and then you can lower the frequency after that. Right?
So Harvey, I'm gonna talk about that in a second, but one thing that stopped me from not quitting before, not that I ever thought about it, it's just something that this podcast just hit me hard in regards to what could happen, how much better would you be? Because I remember telling you and Bayman in your your letter grades or your letter homework, whatever, is to not drink before you trade, the day before you trade. And I was like, and then when that podcast hit, I was like, well, I still trade fine with drinking. But once he said, how much better could you be? I was like, fuck, that's true. because I still take losing trades, and maybe that drinking contributes to. So I was like, oh, okay, fuck, all right, I need to stop too, and
Here, hold on. Sorry to interrupt, but I just got a message from FatCat, and he asked, which stream?
I thought he's doing it live on YouTube.
I think the answer to that question would be yes.
But he said was stream.
Maybe it's watch stream. I don't know. He's got a question mark there and everything.
I don't see him on YouTube right now.
Hey, last minute. You should do this on YouTube to get some views. Okay.
Well,
and now he writes which stream. So do you guys want to do it right here? You know,
I don't know what. I don't know. It's up to you. But really quick to talk about what you just said really quick.
No, that's fine.
I think that I don't know about you. Maybe you're more stronger will, better than I am, or whatever it is, right? It's not about pushing anyone down or up, but perhaps you're the type of person that can do it. For me, I can't just have. I mean, I can just have one or two drinks. That's not what I'm saying. I'm saying I'm the type of person that's like, it's not about one or two drinks and I'm gonna fall off the wagon or some shit like that. But it's more like I want to know how I would do with 0 drinks for like for the week. You know what I'm saying? Like for the month.
Oh no, I
for
get
the
it.
quarter.
I
Yeah.
go, but I just feel it's a very challenging prospect, right? And I did go 8 days without having a drink, and I had a drink. After that drink, it was like it just started the ball again.
Right back to it.
And
Yep.
And then it was like, okay, and there was really no reason why I did that drink. I think I told you. I don't know if I remember if I told you guys, but it was like it had no reason to even do the drink. Like it was just like, oh fuck it, right? Like
it's been 8 days.
It was like, oh fuck.
Yeah.
So it's a lot like exercise for a lot of people, right? If you exercise for a week, 2 weeks, 3 weeks, you're great, and then you're like, fuck, I'm sore. You take a fucking day off.
Yeah.
And then you take, or like whatever your schedule is, right? You just skip that day. You're like, okay, so and then all of a sudden now you skip 2 days.
Yep.
And you skip 3 days, and then all of a sudden you're not fucking exercising at all. You're actually just fucking doing even less, and it like.
All right, he's on. Yeah, I get it, Harvey, but let's jump on there, and it's semi-profit.
Sure. It again. What did you say?
FatCat's on, so he said let's go over there.
Oh.
especially for scalpers, I wouldn't even be profitable trading micros. Okay, like I would not if I'm with my stats. Okay, if you look at my stats, and if I would be scalping, I would not be profitable with micros, but I am profitable with minis. So the commissions are just too high on macros. You pay way more commissions, like way more. For like if you swing trader or stuff like this, or like move to move, like macros do work. But if you're a scalper, like it just messes, and if you take a lot of trades, it does mess with your.
There it is. What? Check. Okay.
What up, sire?
Dude, we're neighbors. Remember I changed it to neighbors?
Still a sire.
Not neighbors no more. I moved out. Hood.
I still recognize my king. Before you start, let me know. I want to make an announcement.
Okay, that's fine. I need
Yeah, you take your time.
God damn. I gotta bring in my OnlyFans account.
Hey, are you gonna stream this on YouTube or something?
I'm gonna record it.
Okay. Okay.
Hold on, there might be an echo. I gotta mute. Alright. Give me a mic check.
Yeah, do you want everyone else to be muted?
I don't care. Harvey invited me here, so you guys do whatever you want. Right. I don't have no plan.
You let me know when you're ready.
All right. Give me a mic check.
Yep. Can you hear me?
Just say mic check.
Mic check 1, 2, 3, 4. How are you doing, sir? Welcome back. Your seat is still warm.
Check. Hold on. Check. Check, 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 check. 1, 2, check 1, 2, check 1, 2, check 1, 2, check 1, 2. Audio check. Oh, ooh, not 16 dBs. Check, 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 check. Okay, it's a lot of checks. Give me another mic check real quick.
Mic check. 1, 2. Czech Republic.
Okay. Sure. Toggle automatic mixing for this input. One more check, please.
Check. 1, 2. Check.
Check, check, check.
My king is back. I'm gonna turn off soundboard, by the way.
What's that? What does that do?
It does stuff like this. I think I...
Bruh.
Oh, that's cool. Wait, is that Discord?
Shut the fuck up.
Everyone, we could use it. They can't use it. But, yeah. Harvey's a favorite one to me.
The price is wrong, bitch.
Ready when you are.
All right. First couple ground rules. If you're trolling, if you're rude, or if you're an asshole, I'm just gonna kick you from voice quickly, swiftly. If you have a hot mic, you're just gonna be muted immediately without being told. And that's it.
All right. Anything else? I didn't come here with a presentation. Harvey invited me.
Well, I think people can just unmute and talk, or type in chat. Type in 0 hour stream so he doesn't have to switch back and forth between ES text and whatever. But you guys are welcome to unmute and talk.
Hi, guys. I have a question for you, FatCat, regarding your concept of expected value and the different values you describe to them. So I haven't been a member of this Discord for a very long time, but so what I understand, or how you go about it, is you look at, for example, a Gaussian distribution, and maybe we're at the upper end or the lower end of the distribution, and you expect price to go back in the middle of the distribution, and that would be example EV1. And then you have different setups, I guess, where you classify some moves as EV2, 3, or higher. Could you explain a bit more in that regard, how it works? And yeah.
Sure. When you say Gaussian, are you talking about a bell curve?
Yeah, exactly.
Okay. Let's see. So there's a stream up. Tell me when you can see it.
Looking
you see
at
this? You see it?
Yeah.
Expected value is simply so there's several setups on here. The yellow boxes are gaps, which is one type of setup. The white boxes are going to be the curve, right? So there's a curve here. That is the value zone of the curve. There's another curve here. That is the value zone of this curve. It's already been taken out, like it's gone through. in the overnight, so I would delete that. A curve has a life. It's like a bee. When it stings, it's dead. So as soon as the price goes through, it's dead. Anything else like these red lines, just so you kind of know, these are going to be like low nodes on curves or high nodes, the key high nodes, and there's a channel here I marked out, and then the orange and yellow lines are just simply support and resistance that I'm tracking because there could be stop runs. So the way EV is calculated for me, and it doesn't matter what it is that I'm looking at, it's usually just the gaps or a curve. So usually just yellow boxes or white boxes. This says EV2 gap. So this yellow zone already got traded. It already went through once. Well, it got tested twice. So at some point it's going to trade again. So what's interesting with the gaps, at least, is they'll get traded, the price will go through, and then there'll be a point where market might chop it, and then that cycle starts over, and then it gets tested again, and then it trades through, and then there will be a time where it gets filled in, where it chops, and so on and so forth. So all expected value is how many times has something test something. So you can see it tested it once and twice here. This is a 10-minute chart, by the way. So for me, if we look at a 30-second of that same area, which is way up there, we'll go up there. I know it's a lot to look at. So again, just the yellow box. Tested it once and twice. Now on a 30-second chart, there might be micro tests. I don't really consider that a test. So what I want is between each test, there needs to be at least 10 minutes, because expected value is, time is huge for me. So like, the more, like for instance, a range that plays out for several days tends to have an explosive move. Like if you have a range that goes on for 5 days, the move will be explosive. So time really matters. Like how much time has passed between each test. So between here, this test and this one here, that's 11:54, that's 9:30, that's, several hours between each test. So that's good. So when it comes to expected value, there's two calculations I'm kind of looking at. How much time has passed between each test, and how deep are the pullbacks? You can see the pullbacks the pullback from this test to this test is substantially large. It's gone down how many ticks at this point? 85 ticks. That's some massive deep pullback. So how many times is the edge of my setup being tested? And this one got tested twice. If it comes up to the midpoint, then I'll give it a mid-roll rating. So I'll say, hey, it went halfway through, because I notice on a lot of these things, like whether it's a curve or a gap, which are the two main setups, if it goes halfway through, then there's an even higher chance on the next test it'll go all the way through. And if you think about it from a curve's perspective, what's at the middle of the curve? Usually there's a point of control. So if the price goes to that point of control and bounces it and comes out, then I'll put mid-roll. So I'll have expected value 1, 2, 3, whatever it is, and then mid-roll. The higher the number, the more likely it's gonna hit and push through. And then that's when you can start to hit with more size, at least for me. So all it is simply a test. Let's see if there's another example. Right here, this white box is EV3. Let's go to that. So none of this counts. This price action right here, by the way, is a curve. So I drew the white box. You can see it came in once right here. And then it came in twice. So there's plenty of space between the test. I'll zoom in substantially. So there should be like 30, 40 minutes. So you're looking at 210 to 250. Yeah. So there's been 2 tests down here. And then you have a deep pullback, which is good. So plenty of time. Plenty of pullback. Because here's the thing. If it tests here and it barely pulls back and keeps testing, I don't make the EV number go up. I need to see a deep enough pullback. What that is dependent. So if it tests it and it just keeps grinding on top of it, it'll be an EV1 if it's the first test. Now, if it's really grinding on it for a few hours, I may give it an EV1 plus to say, hey, it's just one test, but it's really attempting to go in there. So I'll put a plus sign on it, and that lets me know that this is a little bit better than an EV1, but it's not quite as good as some others, like an EV2. And then it pulled back right here. It didn't quite test it. It would have needed to go down 1 tick, but close enough. I'm going to count that as an EV3. A lot of trading is close enough because exact levels don't work. It's more so areas. So all it is how many times has it tested. So it's been tested 3 times. Once here, once here. This is actually a mid-roll. So in the white, it says mid-roll. Because it went beyond, it went either to the midpoint or beyond, and then came back in. So there's a high chance that if it's coming back in, it'll go all the way through, which it does right here. And then it finally taps the target. It pulls off of it. Also, these yellow lines right here, this is kind of not what you asked, but those for me are potential stop runs. And you can see this bar, because this happened in the overnight on the 18th. Yeah, this happened on Sunday night, which I wasn't here. So I prepped this Friday. There's a prep video from Friday if you want to check it out in the Discord. But this hit all those stop runs and puked. And then finally made it through. So EV3 with a mid-roll rating for me is pretty high probability. Let's try to go for it. And it worked. So did that answer the question? All it is how many times is a level, quote unquote, being tested.
Yeah, definitely. Thank you for the clarification.
Now, is that the right way to calculate EV? Probably not. I think there's more of a mathematical equation to it for some other traders, but that's the way I do it. But if you think about it, the more something tests, the more it fails, the more trap traders probably are on the other side. So therefore, it's some point it's gonna go, and the market is very much like a spring. The more you wind it up, the more explosive. So I like seeing fail. I like seeing shit test and fail. All right. Anything else or?
So if you're looking for a setup right here, you of course wouldn't front run it, but would probably wait for confirmation that the gap is being targeted or the area.
You're asking this example, like how would I get into it?
Yeah.
Okay, so this is a white zone. This is a curve. This isn't a gap. So just to clarify again, a gap is going to be, so on the right is the 3-year profile. A gap for the most part is the low noted area. See this yellow box to this yellow box edge? This is a low noted area on the 3-year profile. Right here is a massive chunk missing. That's a 3-year profile as well. Sure, there's a white box in it, but that's because there's a bell curve in there. So the white boxes are just straight up curves. So there's a curve here, like if I draw this perfect, you'll see. See how it's almost, and it's also a pretty perfect looking bell curve too. For me, like when it comes to drawing bell curves, just so you know, how is the price action on the chart look to make that curve look like a curve? There's 2 things I want when it comes to a curve. It needs to look like a curve. The better looking curve, the better it trades. And how was that? What type of price action formed that? The more rangy, the more perfect the range looks when that curve is formed, the better. So it's like a marriage. Good looking curve, good looking price action. You put them together and typically you get a cleaner move. So by looking at this, it has that very, again, 10-minute chart. It has that very rangy, sweepy price action. It looks like a good curve. So how would I get into it? Well, I'm going to wait for the edge. Assuming this didn't set up in the overnight, all these little yellow lines, that for me is potential stop runs. So it depends what the other markets are doing because there's correlations. So I could, let's see if NQ was doing something at that time. So we're obviously looking at the DOM. Like, how's the order flow flowing in? What's the pulse of the market look like? Let's see what happened exactly at that time of that puke. Okay, so NQ was here. NQ was actually trading out of a gap. So NQ, see this yellow zone? That's a gap on the NQ. It jammed through multiple times and started filling it in. And then at the time, yes, went through here. NQ was coming out the other end. That, it's hard to say without actually being there. But the fact that there's a lot of stop runs is good right there. Part of me executing is like being in sync with the market, looking at it after the fact. It's hard because I can't feel it setting up. But the fact that it's coming out of a gap, there's some reclaim that could pull it down. There's a higher node cluster on the 3-year. There's almost like a micro curve here that could pull it in. Let's take a look at Russell real quick. So it's Russell 10-minute. I want. There's the 10-minute. So let's go to that time on the ES. Oh, well, that's interesting. Okay, here we go. Let me bring it to the other chart book. Wait a second. Are you guys looking at the right shit? Yeah, you guys should.
Yeah, we see.
Okay, so at the time Russell set up. So here's ES. It was right at this time. Russell was right here when it was setting up. So what do I see? Well, this is what I see. I see a range right here. So here's what the profile would look like at that time. Well, the curve looks like shit, but you have that good rangy price action. These markets, for the most part, are always mean reverting on the smallest time frame. So on these 30-second, well, this is a 10-minute chart. For the most part, they mean revert. So at this time that ES was breaking in here, Russell did a few things that I find interesting. It had top ticked 3 times. I think Zero still looks at top ticks. Zero, do you still look at top ticks?
I do.
So it had top tick 3 times. It never bottom ticked. So what that tells me is there's a high probability this Russell should go all the way through and bottom tick. It didn't, and I think it still should. But at the time, it was right here. Because if I put the crosshair, the time lines up right with ES as it's breaking in. There's a point of control on Russell right there, though. You can see the point of control. So we're just several ticks above it. It's a point of control for a reason. That's going to attempt to pull the market back in. And also, it's a really nice swooping range with no bottom tick, and it has 3 top ticks, kind of one after another. So for me, Russell is in a high probability area to go down. And if Russell goes down, because it's so close to the point of control, that should in turn drag ES, which it did. So Russell would give me more of the confidence in this specific example to actually hit the trade on ES. ES is on top of a bunch of stop runs, which are those little yellow lines. I need to delete them later, but I'm going to do that for prep. And then I need to delete that white box and update the levels. But at the time, with the top ticking, the beautiful range in Russell, and the fact that the point of control is right there, for me, like, that's a high probability shot. So Russell has set up to mean revert, and ES has an EV3 with a mid-roll on that white box, which again is a curve further back. So hypothetically, that's high probability. So therefore, that should also go through. So now I have 2 high probability trades setting up at almost the same time. Also, where Russell's setting up at the same time as ES, hypothetically, that's first standard deviation of this range. So you can see there's the range here. You know, here's the range. Hypothetically, right in this section, you can just use your eyes. You don't need tools to show you exactly where first deviation is. Hypothetically, that's first deviation. So Russell's setting up to mean revert on first deviation as well. NQ, again, wasn't really giving me much when I looked at it. But the fact that these other things are happening across these 2 other markets is really huge. So therefore, that's how I would do it. That's how I would analyze it. And then obviously, you know, there's 3 DOMs, so I have the 3 DOMs for the 3 markets. And just, what does that feel like? And then I'll mark those levels out on the DOM, because it's just like your eyes don't travel as far. So, because that's the thing. Like, I'm looking across, like, you know, my eye travel from here to here. That's quite a vast distance. When I have a bunch of DOMs only taking up half of a screen width, I can mark the levels at each price on the DOM with arrows, or I just type something up. So it saves my eyes from having to do all this work across the screens. And then obviously looking at order flow for so many years, there's a feel to it. So like, how's that, like, those orders coming in? What does that feel like? Is it skittish? Is it not skittish? I don't know what it looked like at the time. It's the overnight. So hopefully that's how I would have entered the trade had I been there at 6:30 or whatever time it was at 7 at night on a Sunday night, which I don't do Globex. So these setups will pan out in the overnight. Unfortunately, at times.
Okay, thank you, man.
Yep. What's the left volume profile daily? On the ES, these are just RTH. Well, yeah, these are just RTH. So this is just an RTH profile, but I cut it up. If you go like this, there's a curve up here, right? So I mark the value zone, and then there's another curve down here as well. I'm not sure if you've ever seen how I draw curves. I'm not gonna adjust it because I gotta do prep. But like, there's a curve here. Here's the white box is the value zone of this curve. This white box is the value zone of this curve. It's just RTH. And this white box down here is this curve. It's hard to see because it's gray. Which this curve is actually inside of a gap, which is an EV0 gap. So I think the market may not go all the way through down there. We'll see what the other markets are doing. It could bounce. Actually, it is bouncing. Yeah, see it bounced off the edge of that gap. I don't think it's going to just flush through that section. That's such a substantially large gap. But all those profiles are RTH. But what I like to do is, again, I'm measuring very specific price action. So what time they start at is going to be random. The way I draw a curve is so dependent on what does the price action look like. It's never like at 8:30, 9 o'clock, 9:30. It's never just this hard cutoff because, in my opinion, auction market theory doesn't care about the time. The market is going to start to accept value at random times. So, and then what I do is I draw the curve, get value zone. What I like to do more recently is after I get the value zone, spread out the curve over a vast time because I want to know where exactly are the low nodes between each of these curves, right? You have this upper curve, so there's a big low node down here. There's a low node here, and then there's a massive low node here. The thing is, when I look at the 3-year, though, there's a very high node on the 3-year that is in that low node section on the RTH. If there was a low node RTH and a low node on the 3-year and they matched, I'm really going to lean on that low node and probably play it. But since they don't match and there's a high node here in that pocket, to me, that isn't as reliable. It's not matching. So those are just RTH curves. Anytime you see a curve on the left, it's mostly RTH. Now, there are composites when we go further out. There can be composites that comprise of many days. There's something down here, actually. You know, this is 1, 2, 3, 2.5 days right here. But if you look at the curve, it's an almost modelish curve. It looks like a curve, and the price action has that really rangy look to it. It's a little sloppier in this section, but it still looks decent to potentially leverage a trade to go all the way through. However, what are the other markets doing? What is the approach? Where have we pivoted prior to coming in there? What does the price action look like up until the point we're hitting the edge? All of those factors matter. So it's hard for me to say, yeah, just short it because it could bounce it. Something else could happen. what is this gap above us doing? What are the other markets doing? Are the other markets trying to go long? When we get here, are they all trying to go short? So the way we approach, there's like, you guys ever seen Futures Trader 171? Like his like preps, he has like the 3 scenarios. I think you do it 2-0, where you're like, it could either go here, 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 or here. Same concept. It's always good to like visualize or try to figure out as many scenarios as possible, so that way when one of them sets up, you're not surprised and you can handle it accordingly. I believe in strike zoning video around 45-40 mark. You mentioned it when the offer is lifted but you don't see the bid dropping. You mentioned that if you're long position, it's a bad sign. I don't understand why either, as I interpret it as bid being strong enough to rebid immediately. What year did that video come out? When the offer is lifted, I would need a specific example. I'd have to rewatch that. The order flow has shifted. We're in a different environment than what that video might have been. If I watched it, I could tell you exactly what it is. When the offer is lifted, but you don't see the bid dropping, you mentioned that if you're in a long position, it's a bad sign. I'd have to see it in more detail. Quick follow-up on EV. The higher the EV number, the higher the probability of it happening. Yeah. I mean, think about it. That's the most. That is one of the more elementary things in trading, right? It's sort of support and resistance. If you think about it, just simple. Think about in the terms of simple support and resistance. The more a resistance zone gets tested, the more violent the breakout's going to be, right? So the EV, the expected value of us going through it goes up. Also, your risk to reward gets better, too. It's like Lance Brightstein put out a video recently because he likes to catch knives on the right side of the V. He talks about the more legs there are on a down move. Obviously, there's nuance. The more legs there are on a down move, the higher the EV is. The EV is. I'm not. There's a time and place for me to catch a knife, and the way he does it seems very different and foreign. So I don't really look at legs as EV at this point in my trading. But yeah, it's just how many times is something getting tested? The more it gets tested, the more likely it's going to eventually just blow through. It's not going to be tested infinitely, right? Clearly there was somebody there that there's a lot of market participants. They're just going to give up at some point, or they're not going to redefend it. Either way, something psychologically is happening there. John Lockett, good options trader, says technical analysis works because we think it works. So therefore, as humans, we all believe in this shit. So therefore, it is working. So therefore, the higher the EV number, just in my experience, I don't know, it just works. It works. Will I milk it for everything it has? Probably not. Until we have more volatility. Let's see. are these prep levels from key tags in which you found edge. So, okay, the yellow gap in the art of the trade video, the yellow gap, I have a statistic from that time. I've tracked the gap for years with statistics and then used raw data to figure out how much it was making, how much it won, and the yellow gap, the yellow box has edge. It had for me it has edge. You got to understand that the trade is very nuanced. Like if we're ranging on top of the gap, it's not going to work. If there's a curve that is forming on top of the gap, it's not going to work. It's going to probe it a fuckload of times. So depending on how we range above it really, really matters. Correlations at this point are really clearing shit up. It's just kind of insane, especially when you watch it on the DOM, how interconnected these markets are and how arbitrage they are. I could go on forever about correlation. It's interesting because you'll see a time where they all shit themselves. However, there's times where NQ and Russell will dump, but ES is barely moving down, and ES is almost staying in this one area. And for me, ES is anchoring, and it's kind of like a moving average. You know, when you look at a moving average, the market will only go so far before it rubber bands back in. I'm noticing that with correlations. So if ES isn't dropping with the others or one's moving too much, they tend to rubber band back towards each other. They definitely get offset and shift and stuff. It's not this perfect correlation, but it's like in this moment of time. So that has edge. So the yellow box has edge, statistical edge, and then the curve. So a volume profile is one of the only repeatable patterns on a daily basis in every market, every day, on almost every time frame. You could find micro curves. You can have composites that span days, weeks, even. Every day there's a curve, multiple curves formed in every market on multiple time frames. So therefore it is a repeatable pattern. So, and it's probably the best repeatable pattern in my opinion. It's not like a wedge where it's not always there, or a channel. It's not always there. Curves are always there. They're distribution zones. And then also ranges. There's always ranges. There's always ranges. So statistically speaking, another stat that I've ran for an extremely long time that has tremendous edge, and it's shown in the Art of the Trade video, is mean reversions. Most of the time, the market is going to try to come back into the center of that range or the center of that curve. If the center of the range and the center of the curve align, even better. Because that's like that's very magnetic. The larger the curve is, the more magnetic it is. So the price has to travel out even further to really escape the gravitational force of all that. The smaller the curve, it doesn't need to go out as far to potentially escape it. So most of my trading is attempting to leverage the gravity of the mean. Because from my statistics, anytime I'm really trying to break out, it just is not. It doesn't work as well as going in. There are times where you can break out if there's some form of compression or some other bullshit setting up. Let's see. Yeah, my EV calculation is different. I've been using it for so long now. That's what works for me. Is it right? I also don't measure shit in units of R like other traders, so it's just I do things different. What is your execution time frame and higher time frame for analysis? So we go from currently it's a 240 minute. So I posted a bunch. I've been posting preps in the YouTube. Well, somebody else has in the YouTube section all last week. I've been talking about NQ since the beginning of that prep. So this is a 240 minute chart. I've been talking about NQ since the beginning of that prep. That's on this Discord, going to this green line. I'm like, it needs to jump this yellow gap. That's a major gap, by the way. That's a huge gap, and it jumped it. How clean was it? We'd have to look at it on a smaller time frame. There was a shitload of expected value on it. At some point, it's gonna go. And the higher the expected value is on that gap, it's probably gonna not just go. It's probably gonna overshoot the gap and keep going. So I keep that in mind. Like I can hold it beyond target. So for me, there's a major composite here on the 240 minute that is right here. This is in Q again, 240 minute chart. Notice the ranging looks rangy. It has that range look. And then the curve spans from January 7th all the way to April 27th. So this is a multi-month curve. It looks like a curve. The range, the price action looks relatively good. The higher the time frame, though, the sloppier the shit starts to look. The problem with trading super high time frame shit, and by the way, my setups are fractal. So when you are, it's the same setups on each time frame. It just gets smaller and smaller, and you use the smaller time frame to time this bigger shit. The problem with higher time frame is like, okay, here's a value zone. It's not going to it deflected it relatively clean back here, which is surprising. That's not always the case. Let's look at it when it was breaching in. Well, it just shot in. But on a smaller time frame, it could have chopped its way in, and it could have been a substantial chop that could get you fucked up. So for me, the highest time frame is saying, hey, we could go to this green line. Now it's gotten relatively close. Sometimes close enough is good enough, and then it never hits it exactly on that tick, because that's not reality. We'll see what the other markets are doing. ES is in a weird area. ES, in my opinion, hit a midpoint. So we'll just look at ES real quick. ES is also in a composite on a 240 minute chart. Same thing, the beginning of January up until May something. Now, and just like NQ and ES actually, NQ and ES will do different shit. However, there are times where they mesh up. So at this time, this place, NQ looks relatively similar. This is why I like Russell. Russell behaves very differently. Russell is very much a curve, like a bell curve heaven. Like it. And I like Russell because it doesn't behave like these two. NQ and ES have a similar behavior. Russell's just so different. However, it definitely influences the fuck out of these two markets. Because there's times where I'm like, why are these markets rolling over? And then it's because Russell hit a major target. What's interesting about Russell is like when you look at a 3-year profile, it'll hit a high node or a low node. It'll pivot the shit out of that and just go the other way. Whereas in ES and Q, the behavior is different. It'll hit one of those zones and it could just, you really never know. Where Russell is really much a flip on a dime type market. And that really influences the shit out of these two. So for me, currently, ES is at the midpoint. So if I take this modified Fibonacci tool, we've rotated and this is how many ticks is this? This is 138 tick. No, this is 1,381 ticks from green line to green line. It's a big curve. You don't just go across that in one day like you would on a smaller time frame. Remember the curve we looked at that set up at 6:30 at night last night in the ES and how I panned that out, that white box? The same thing as this. Just is not going to do it in the matter of like an hour, though. You know what I mean? That's 1,300 ticks. So the thing is, it's hit the midpoint of the curve. It could pivot here. And think about it. Look how wound up this is. If you look at, and this goes to what Ryu was saying, if we look at a daily chart, look at how kind of up in this upper region here, 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 it is all resistance and roughly the same area. Not to the tick, the same area. So the market has been spinning and turning on a dime up here for whatever reason. Now we're finally blowing out. And this is like a well over a year of a range, essentially. So now you're going to have a substantial move out, which is what's happening. So let's go back to the ES 240 minute. This is when it and then also look at this range, this multi-day range that goes from like the beginning of April all the way up until, you know, really the beginning of this month. There's a range here, right? Look how many times it's pivoted here. It is clearly a range. I drew a curve on it, and it finally exploded out of this range. So if we look at it, it's already ran. Let's use a fib tool. It's ran 859 ticks. And this all comes back to what I was originally saying. The higher the EV, the better the risk to reward. Now, I am by no means a pro in leveraging something of that magnitude because I was a scalper and my trades are very, I don't like taking on big amounts of risk. I'm sure as the years go on, the more I'm seeing this, the more comfortable I will get with actually hitting something of that magnitude. But I think we're going to roll here. So there's your highest time frame. So now what we can do is go down to the 10-minute. You know, we can look at that breakout on the 10-minute of the ES. So let's pull up a 10-minute here. So it happened, well, it happened way down here. Not mistaken. Yeah, it happened way down there. Way down here. What was it, the end of May? This is it setting up. Yep. Okay, yeah. There you go. There's the top of that range. So when we come on a 10-minute, it is vastly a different picture. It's a different landscape. It's so sloppy compared to the 240-minute. Let's look at where was that value zone low at? At what specific price? That would be at 23.25, 43.23. Oh, where's the top of this range where we finally have the breakout? Is right here is the top of the range. So you have a gap here, which this gap can be leveraged. See this giant gap? That giant gap can be leveraged to get into this value zone of this composite. So now we're going to combo different setups to get into it. Because if I have statistics on a gap jump and mean reversions and all this other shit, we can combo different things. So we can leverage the gap, which it sets up. Did that have EV on it? No, it didn't. Not at the time of these pivots. Right here, it starts compressing on it. See, and then you got to really zoom in. So it's compressing the edge of it. It's really testing the edge of it. So that would hypothetically be EV1. You pull down hard. That's an inventory flush. The open of the market is somewhere right in here, actually. And it jumps on the open. It jumped right on the fucking... I think I remember this. Yeah, it jumped right on the open. Right on the open. It jumps it. Hits the edge. Pulls back to the other edge. And then finally goes... again, holding something of that size time frame is hard for me to do. I'm going to use it for a smaller entry, and then it clearly goes sideways for many days. This is the mid of this gap, and it pivots it, and it's also a very prominent low node, so that could key off to a potential long. It happened at night, though. And then they finally start just pushing it up. There's another gap here. EV1, so that's one test, two tests. Not quite a test, maybe a test. So it's about an EV2. What's interesting is it's pulling back and holding this low node. And depending on what my higher time frame analysis is and what the other markets are doing, they could drag it through this gap, which that's a pretty clean move. Now, is it going to come back? I don't know. Then you go down to the 30 second to see even more noise, and then again, even smaller. You know, what are the other markets doing? And that's what I've been finding. And if you follow me on Twitter, I've talked about it a lot in this Discord too. Is like same setups. Russell can have gaps in different areas, and Q will have gaps in different areas, and they'll have curves in different areas. NQ can have just like what we saw in the beginning of this stream on that short for ES. Russell had a range. Russell had a point of control, so that's a mean revert. Same thing with, and it was a currently established mean revert. Russell is currently trading there, where ES was setting up for a prior value area, a prior mean revert that it's not traded yet. So a different setup, kind of the same, but different stages. However, there was high expected value on ES. Sometimes maybe NQ was coming out of a gap at that time. NQ had reclaims below that reclaim, which is a whole nother thing. I'd have to been there, but NQ that reclaim could have assisted and helped drag it down as well, which is what looked like happened.
You need anything? If not, I'm gonna head off.
No.
All right, later.
What else do we have? I saw the market most of the time back to the prior range. RTH test, bottom tick, top tick, then price complete his bias. That's happened many times. I work with that and found edge with it better. So you're talking about bottom tick, top ticks working. How do you use 3-year profile during a rollover? Go to the FatCat YouTube section and watch the video from Thursday, because I have to readjust all the levels. I traded up until Thursday on the old contract. And at the end of Thursday, the NQ and Russell were moving, not because of market orders, like bids and offers. It was moving because bids and offers were pulling. So at the end of Thursday, it's like, all right, it's time to roll over. Because I want to keep my levels. It gets all fucked up. That Thursday video, I show the adjustments. How I completely have to get rid of a lot of shit. What I don't need to get rid of is the profiles I drew on the price action, because it's, for some reason, it stays the same. However, the fucking curve is all shifted because the new contract is at different prices. So
A little bit.
my
It's not
gaps
that bad.
don't, for whatever reason, the gaps don't, like when I draw the gap zones, they don't translate during rollover. Again, the curves will. The gaps don't. So I got to readjust them. What was interesting, though, is what was interesting during rollover is one contract was trading into a gap, and the other contract, the older contract, wasn't on a gap. And the newer contract doing the gap jump influenced the older contract. So it seems like in rollover, you could almost watch multiple setups across both contracts. We'll see next rollover, and that's too much screen real estate. Either way, the gap works. I roll over. I gotta change levels. It sets up. And there's been problems in this room where people's 3-year doesn't look like mine. The gaps seem to still work on other people's shit. So the 3-year seems to stay the same. What is my rollover? I forget what it is. Let's see if it's on here. Continuous futures contract, volume-based rollover, back adjusted. So that's what it's been. I've just been working with that forever, so I don't... For me, it's like... Is there a way to pay for trade prep subscription with crypto? I've never owned crypto in my life. So I don't know. Probably not. Also, just to recap, why use a 3-year? Unless somebody has a question, then I could go into why a 3-year. We'll see what you guys say. It's because it's not. It's because the profile structure is rigid and it's not fluid. So this low node section stays a low node section. No, even if RTH trades the fuck out of it. Let's go to a daily. So this daily profile these are daily bars on the ES. So a lot of this structure, for instance, see this high node right here? Let's look at this high node. Okay. And this can apply for low nodes as well. This high node has been traded 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11-ish, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25 days. And so on and so forth. So this high node has well over a month of price action. Well over 30 days. We could probably keep counting. Of price action. So if price goes there again, that high node isn't going to shift and change. For instance, when you start a fresh session, like a brand new RTH session with a brand new RTH profile, it's so fluid. At the end of the day, that RTH profile doesn't look like what it did at the beginning of the session, right? At the beginning of the session, it can create a perfect curve, and then it can create another curve, and then it's double distribution, then it fills in the double distributions, and then it becomes one distribution, and then it gets all it just starts moving and melding because it doesn't take as much volume to create that profile. Whereas on the 3-year, it's more rigid. This profile is comprised of fucking millions of contracts. 30 days of trading here, that specific node is going to have hundreds of thousands of fucking contracts. So therefore, when the RTH session starts trading on it, it's barely moving at this time. There's a fucking yellow jacket in here, but fuck up. Hopefully I don't get stung on stream. If so, it'll be good fucking comedy. So that the profile, the 3, oh man, he's coming for me. Shit, bro, get out of here, please. So the 3-year is like it's less subject to fluidity. So when you have these low nodes, these high nodes, they're rigid, and they certainly influence the fuck out of the price action. So the 3-year is like a road. It's like, okay, is there a shitload of potholes here? Are we going up a mountain, down a mountain? It's like the equivalent of driving on a solid road versus trying to drive through mud. But we might get stuck or some shit. Because a fresher profile on just an RTH or even an ETH, it's more subjective to fluidity. That profiles morphing and shit. So when you guys try to trade these low nodes or whatever on such a small time frame, that low node may not be a low node anymore, and then before you know it, you overfought. Whereas on the higher time frame, like a 3-year, it's rigid. That low node is going to stay a low node today, tomorrow, and then the next day. Now, when we go to all-time highs, things are a little different, right? Because the 3-year is just now printing, so it's more subjective. The fluidity, all-time highs is a harder trade, especially when you're going into unexplored territory with no structure. The RTH, and also what's good about the 3-year is it creates beautiful curves. It creates beautiful, from this low node to this low node, there's a curve. There's a micro curve from this low node to here. You can see it. There's a curve there. Or you could take it from this low node to this low node, and there's sort of a bigger curve here. There's a curve from this red line to this low node. Yeah, it's a bit janky. And it's going to trade like shit. There's a big curve up there. There's a curve here. There's a curve here. You could even zoom in and cut it down in the smaller sections and attempt to trade from here to here instead of the larger curve. So at some point, I'll get to the point where I really start to cut shit down to smaller time frames. RTH is good because RTH curves are fresher curves. They're newer price action. They're what's hot, what's current. RTH session, in my opinion, trumps everything else. It trumps composite setups. It trumps everything else because that's what's currently happening. That is where the fresh volume is coming in, and that's what you have to work with. And what I like is when the RTH curves and the RTH low nodes match the 3-year. When they're synced up, you tend to get cleaner price action and movements. When they're desynced, like this really prominent node is in this pocket, you're going to get more choppy behavior. And I've stared at this. I've been using a 3-year since like 2019. So for me, there's like years of staring at it, hundreds, if not thousands of hours of looking at price just moving on it, and it's like a road. It's more solid. And it gives Jesus fucking Christ, dude. That fucking Yellow Jacket is just cruising. Yeah, so it's more rigid, and it gives me more guidance to an RTH session or even a composite. Composites are good too. I love it when a higher time frame, multi-day, multi-week composite. I love it when the low nodes mesh with the 3-year. And the gap jump is solely 3-year dependent. By the way, I don't think it works on RTH or any of that other shit. It might. The trader prep. So I just made a video yesterday. You're gonna want to go to coffee if you're interested in it. And it's under there. So let me just, if you're really interested in it. There's a video I posted yesterday. I'd go watch that first, and then you just go to my coffee membership. It's here. Join it, and then I just post the preps in there. I'm gonna post a prep tonight. If you've seen the moonshot video, again, I'd watched the video I posted last night. Here. I talk about everything. I'd sit there. It's a 37-minute video. Wow, I'd watch it because so you really understand like what you're getting, what it's not, because I don't want you guys to get something and it's not what you thought it was. Like I explain hell, what the fucking shit. Like this, you got to stare at this shit for a while. This is a lot of information. Hopefully this video helps. And in the prep, like that's the thing. If you guys have questions, you must ask me if you're confused. Like, why are you doing this? Or why are you... I got to verify my phone number. So just go to the FatCat YouTube section. It's out in this Discord on the left. It's called Trader Prep thumbnail. I, for some reason, can't post. Yeah, hold on real quick. Is it cool? Cut. Yeah, Harvey, cut in whenever you want. If anybody has anything they want to say on the mic, that's fine. There are good arguments for not back adjusting. My shit is the way it is. I just, that's what I've been doing all this time. And for me, like, when it comes to like the technicalities of setting like charts and settings, I'm fucking stupid. I just know how to read the shit and trade my setups. So I struggle with Sierra. That's why I like Jigsaw Dom, because it's like the Duplo of fucking Lego blocks. And for me, it's like, if it ain't broke, don't fuck with it. Like, this shit's working. It's like, I don't want to go to the... Because I had Jigsaw before Sierra, and now I have 2 PCs, so I execute Jigsaw on one PC. And all this other bullshit is running on a different PC. And I just keep using Jigsaw, because it's just what I know, what I'm comfortable. It feels like a nice pair of fucking gloves. You know? What is VSD? Scalper DM? I forget. You're talking about the Delta? Or what was VSD? When can I, Yeah, and you can get on the mic. Yeah, no, I've been using VWAP, just not recent. Okay, so here's what I like with VWAP Scalper. First and foremost, okay, so let's talk about that for a second. I like VWAP. I like anchored VWAP. Okay, well, if you fix it, that's fine. You can get on. So I like VWAP. Here's the thing. A lot of you guys know if I fucked with indicators over the last year trying to complement my trading. I've used Tick, ADD, the Vold. We used ADD for a while, and yeah, there's things in it. The Delta. Starting, I like Delta as well. VWAP. The thing is, none of that shit is as good as fucking correlation. And I've talked shit about correlation in the past. I was using it differently. This is just you witnessing trader growth. I'm like, I can't. I could never get it to work because I was looking at it the wrong way. None of that shit works as good as the proven setup. So when it comes to like Delta or VWAP or any of that shit, it is simply a tool to help me get into the gap or a profile play or something of that nature, right?
If I work out, it's gonna be
nothing is working as good as those correlated markets. Here's the thing. Now that we're looking at two other markets, we're looking at three markets now. I've sat here and have looked at exclusively ES for years and years. Now I have more markets to manage. Now I have 3 DOMs up. For me, it's like your focus is finite, right? I'm getting better results. I'm getting more fruit, if you will, out of the correlations. So therefore, all this other bullshit kind of needs to go because then it becomes too much of a problem. Now I'm going to look at correlations and all their deltas or all their VWAPs as well. That's a little bit too much. So you got to kind of just pick and choose your battles. I think all that shit is great, but there's just it's correlations is just, especially in low volatility, is just, and I got to still like really learn this shit. And I'm learning a lot just looking at the DOM, like how they, sometimes, and what's interesting, you'll see like NQ just dump. Like you'll see one of those sweeps, you know what I'm talking about? It just sweeps and dumps. And then what's interesting is ES will start reloading. And it doesn't dump. And it's like somebody knows what happened over there and they're reloading on ES. And then NQ reclaims and then ES bumps up. Sometimes they all dump at the same time. So what's fucking crazy is like seeing it on the DOM and how they move, like how they move on the DOM. Sure, we got the charts with the other correlated markets. Now, like my workload has increased substantially. However, it's just it just works way better than an indicator because indicators can be really hit or miss, and you know what I mean? That it becomes too much at some point. There's already enough shit on my fucking screens, as you can see here, that it's like, well, at some point I can't even see shit. You know what I mean? What I did in the prep was I like to just, what I've noticed in the past is I like to just look at VWAP at the end of the session. I think it's a great target. I think it could be, my DOMs show where the RTH VWAP is, and I'll use that as a target at times. I think it's a great way to find a target. I've used VWAPs for years. At this point in my trading, anchoring VWAP to the high and low of a session, because I prefer anchoring VWAPs at this point over RTH and ETH. I think those bands work just as well. I think you can make any band like that work on any time frame when you have the experience of it. You know, when you sit here and stare at it for years and years or whatever, at some point you get the nuance of it. Just like my gap jump, you don't just trade a gap. There is, the larger the gap, the more likely it won't go through all the way. The smaller the gap, the more likely it is to go through. You guys have seen me give back a tremendous amount of money on really large gaps. I've learned the hard way that large gaps have major teething issues. Same thing with bands. I think all that shit works. At this point, I got to pick and choose, and I've increased my workload substantially by introducing other markets and two other DOMs. So, like, until it becomes more subconscious and more automated, which it's getting there, then I can start to kind of look at that shit to go back to VWAP bands or deltas or whatever. But at this point, it just becomes too much, and when it's too much, you start making mistakes. Whereas, you know, I don't know. Maybe I won't go back to that shit because, like, watching other markets, maybe I want to, I don't know. I've been entertaining the idea of adding Dow Jones. Somebody here has been telling me for some time, add Dow Jones. But until then, I just need the CPU and the brain to, like, be more automated because it's just too much, and I'm getting better results. Auction market theory, price action enough? Question mark. What do you mean? Can we talk about AMT? We have been talking about AMT. Yeah, that's you. Yeah, I'm thinking about YM. Here's the problem is, like, the real estate on the screens. I got to record this session, and now my recordings look fucking stupid. Because if I can't see it, and you know, at some point, what's interesting is now that I'm running 3 DOMs, I've gotten rid of the tape because I can't fit it anywhere, and I love tape. However, there's something you're getting out of watching the other markets that you don't get with the tape. I love tape. I think it has its place. Trading's just evolving. It always is, right? You just get so much more out of setup. I don't know. It's the same shit. It's literally the same shit in other markets. And once I realized that, I'm like, holy fuck. And all it is like multiple factors of support, like that Russell and ES trade we looked at again in the beginning of the session. Multiple factors of support. They're both setting up high probability shit with stuff that I know has statistics. And it worked. So I'm going to be very confident. And if I'm just looking at ES and not Russell, well, shit. Then I'm going to need all these other tools to assist me in it, like tape and potentially bands or what have you. However, now that I can see these other markets are setting up, the setup, well, fuck. I don't need all that shit because this other market is saying something here. What are your thoughts on ES correlation with VIX? I don't look at VIX. I don't look at, and this is, by the way, Scalper D, this is auction market theory, is like, yeah, we could probably go more into that. What are your thoughts on ES correlation with VIX? I don't look at VIX. I know that I like VIX above 20 to have good volatility. I don't think you need to look at VIX. You can look at a fucking depth of market to know what's going to happen. I think looking at a DOM is just really forecasting and just reading your charts. Obviously, the lower the market goes, the higher the VIX goes at times. I don't look at VIX, so I'm not able to offer anything helpful in that realm. What are the blue? So Dave, there's a channel here. Let's actually zoom in. The Friday prep video, I talk about this. There's a channel here. There's a channel here. See how you can see it like, see how it's lower lows? There's a channel here. I could draw the channel line. You can see the down sloping channel. I just want to know where that channel is. Because those of you that watch stream channels tend to get stop run. So I want to know, is this just going to be a giant stop run? There's many things going on in here. Let's pull up the NQ 10 minute. So it doesn't, you can't really see the channel on the 10 minute. Channels tend to be like really good stop runs. If you have a mark, like this is part of why I faded on Friday at one point. That really good trade for, I don't remember how much it was, $4,000 or whatever. I explained that at the beginning of the Friday prep. If you want to know about that, go to the YouTube section and watch the beginning of Friday's prep. I break that trade down. When the market is going down and it's like channeling down, that to me is a narrative. It's a story. It's not just dumping. It's channeling down. So every time it's going down, somebody is attempting to buy it at lower lows, and they keep trying to buy it back up, or the offers are skittish. It could be a multitude of reasons. However, the sellers are having a very hard time of just pushing it down. They're having a hard time, or they're skittish about pushing it down. It could be one of the two things. Either they're having a hard time or they're very skittish about shoving it down. That's why it's channeling downward. And what I've noticed is when you have these really hard, tight channels, you hit them fuckers on the way back up. This is more of a long side thing. It does work on the other side, but it happens a little differently. You know, moves going up have a different feel than moves going down. Those channels tend to just stop run. So I want to, and for me, Dave, before we really look at it, so there's two things I'm doing here. Good old-fashioned support and resistance. Notice that right in this general region, there's a shitload of blue lines from here up, right? There's hypothetically from here over, it's not quite a channel yet. It's more of a range. So from this section to this section, actually, let's pull this fucking thing out because we paid a bunch of money for it. So let's might as well just do this. Okay. So this is a range, right? It has that channel-y look. It becomes more of a channel at this point in time. You see it really channel down. Again, nothing is to the tick usually, and depending on what it is. But what we want to know is like it held here, it held here, it held here. It pushed up right there. That probably was a slight inventory flush. An inventory flush is where they stop run support and resistance, and then it comes back in. However, they are starting to hold roughly in the same area, slightly lower, and they're holding a lot. So since there's quite a bit of, since this general region from here down, has been held, fuck, 1, 2, 3, 9 times, 9 pivots on the 30-second chart. There's clearly resistance there. And since what I do is I draw these rays, and what I've noticed is it's helping me, like, and I'd watch that Friday video. What it's, especially the NQ prep, I'm gonna start like time stamping this shit. These lines are visually helping me know roughly how many pivots are up here. Like, how many times have we pivoted there without me needing to scroll back and go, oh yeah. So I'm like, there's a shitload of blue lines here, so there's a lot of pivots in this region. So for me, if we come up through here, we should cleanly sweep through it. Should. Anything can happen. Also, what are the other markets doing? Interestingly enough, ES has a lot of the same things happening in the same regions. What is Russell going to do? Russell is on its own journey. However, if Russell is, maybe there's a gap above Russell right when we get to these resistance bands. If Russell has a gap and we're at these resistance bands, we're going to stop run NQ, and then Russell's probably going to jump gap. If the gap has high EV, let's assume the gap in Russell has high EV. Maybe Russell doesn't have a gap. Maybe Russell's just trading a range. Maybe this is Russell trading up and down. Maybe Russell is about to go on an upstroke and there's a point of control here. Well, that point of control is going to want to pull Russell in. And if we're right here on NQ, that stop run should go. So you have a mean with gravitational pull pulling Russell in, and then you have a potential stop run area, and those two things going should go quickly. So I want to just know, where's this channel? Are we able to blow through the channel? Like right here, I changed it to let's erase everything. See, this is a dash dot line. That means this pivot and this pivot were tested twice. So I'll dash dot it if something's been pivoted twice, like right here, dash dot. So it's been pivoted twice at that exact tick. If it's been pivoted the same to the tick, if it's pivoting the same tick 3 times, it'll be dash dash. So I wouldn't want to trade this one blue line. I wouldn't want to trade this blue line. I'm more interested in this section, and I'm more interested in how are the other markets setting up when we get there. And if the other markets are all agreeing, then I'm going to take it, and that should all stop run. Also, I just want to know where the channels are, because again, I've seen these damn channels get stop run. Because if you really think about it for a second. What's happening here is it's a channel, so it's lower highs, lower lows, right? Right? So if there are stops here, it should stop run through here, stop run that pivot, then it could stop run these pivots, and since there's pivots here, then it could stop run those pivots. That's why I think channels are great stop runs. We see it all the time, especially on the way up. When it channels up, we see them inventory flush it on an up channel, down all the time. Because you got higher lows and higher highs. And unlike a range, since there's one on top of the other, they combo, the stop run combos into another set of stops, into another set of stops, into another set of stops. So typically you get that quick flush. Now, keep that in mind, because there's some interesting shit happening in Q right now. To break it down, this is broken down in the Friday deal, but I'll do it again here. So you have a range here. See, the white box goes from here to here. So what we know is there's a curve here. The price action matches the curve really well. Hold on real quick. The price action matches the curve. Well, you have great price action. It has that rangy look. So there's a good marriage there. You have your top ticks. You have your bottom ticks. This wasn't quite a top tick. However, we flush out. So the price action actually gave me perfect top ticks and perfect bottom ticks for the most part. That doesn't always happen. Then you have this channel right here. Okay. And then you have a gap. Notice this gap here. This is a different setup. This gap is overlaying the curve. So we rotated up here 1, 2, 3, 4 times. So we've rotated up there 4 times, which happens to be what? The midpoint of the gap. So we've rotated the midpoint of the gap 4 times. And this goes down to me saying the nuances of gaps. If I notice there's a range under a gap, it's not going to go through. This is a prime example of this gap setting up on this day, and it's ranging below it. So therefore, it's not going to work until we come out of this range. So don't play the gap. That's one of those nuances. Now, when it comes back, that's a different story. So we've mid-rolled that gap 4 fucking times. So there's a really good chance we're going to go through that motherfucker. I'll play that. I will play that. What is ES and Russell doing? Hopefully they're doing something where they're playing nice. But that is such a high EV. I'm going to take it, even if it loses. Okay. So now you have a curve down here, though. There's a small gap here. Very small. Could attempt to leverage this small gap to get into this curve. Attempt to trade this curve. Hopefully this channel stops run. It may not. We could mid-pivot, come down. This white box could fail. Either way, we're going to give it a shot. Got to scale. And if it fails, that's fine. It makes it that much better. Because if we get a good mid-pivot and we come out of here for some time and then come back in, oh yeah, then we really should go all the way through. Now, there could be a chance where we go through and we start to trigger those stops. And if we trigger this cluster of stops, this channel, that should give it enough velocity to put it into this gap. And again, this gap also pivoted down here. That's an EV4 plus gap with a mid-roll. That's a very good rating, in my opinion. So if these stop runs go off, well, hell, we should get to target, which is the white box, which is value area high of the curve. But since there's a gap up there, that's another setup overlaid with good EV to where you're going to get more than a profile target. So hypothetically, we should shoot to this high node and see all these micro lines in here. That's a bunch of stop runs too. And I think we should shoot out. I think there's a huge combo play here, by the way. These don't come around that often. I think we need to go to that. Remember on that 240-minute chart, I said, hey, we need to get to the green line. There's the green line. I think if we hit this stop run, there's a gap here as well. There's another gap above us. EV3 gap with a mid-roll, so that's also a high EV gap. High EV gap, bunch of stop runs, another high EV gap. And then I think we should be hitting that high node. Now, let's look at these stop runs. So that's a combo trade. So if you guys have watched the $14,000 trade, the moonshot video, and I talk about this in that Friday prep video, by the way, or I also talk about it in last night's video. The way I found that trade, Harvey was here. Harvey, you were here for when I was prepping. Some of you were here for the prep going into that moonshot. It was 3 days, and it looked like this. It was a combination of trades with high EV, one on top of another. And when one setup went, the other setup went, and then the other setup went. Drama is so good. Chopping is so good because then you get these really crazy pushes. When the market is just ripping and there's no structure or chopping above, I have a hard time because there's no EV or anything. So here's what's interesting. Let's go to this price. Here's the pivots on the 30-second and the 1535s, right? Well, the next day we start pivoting that same area. Inventory flush up. So they blow out all these stops. In fact, they start to go support. However, we come back in and then we start rotating. And this area that was originally resistance that turned to support is now resistance again. So what that's telling me is somebody is interested in defending this fucking area. It's also a prominent node on the 3-year. So there's a lot of volume transactioning. But for the most part, the price action is staying on the lower end of that high node. So it goes from yellow to orange lines here. Normally, I'm using yellow lines for support and resistance. However, if we're supporting and resisting 2 days, on the second day in the same area, I'm going to change the color to orange. So that way I know there's 2 days of resistance. Because if it's all yellow, is that 1 day or is it 2 days? Because remember what I talked about at the beginning of the video with expected value. The more time that the passage of time makes expected value better, which makes risk to reward better. I would have erased these lines if it wasn't for it resisting in the same area. If it had just flushed down through here, I would have deleted all that. But since it started to pivot roughly the same region after the inventory flush, somebody's still fucking interested in that. So if somebody's still interested in that, they're most likely going to puke, and then we're going to finally get the gap to go. And not only that, the gap almost went more than midway through the gap. I'm being conservative with the target of the gap because the profile tapers. It doesn't have a hard dip in it. I'm not going to go down that too much. And then obviously I want to know about all the pivots up here. And this is also letting me know, hey, this is where it pivoted. This is where the mid-roll is. Because I may not get into the trade on time, and I may need to fight my way in, or something may happen. So I kind of need to leverage that. The fight is a whole different story because God knows what could happen during the fight. That's a whole nother discussion. So that's what's going on there, and that's I just want to know where the channel is, so that way, because as time goes on, I can't see that. I can't see the price action. So tomorrow, oops, don't want to move that. Tomorrow I won't be able to see the price action back there, and I want to remember. Oh yeah, there's a channel here. I also want to know there's a cluster of stops here. This is where we pivoted the gap. So if we're trading through the gap, I can't see the price action over there. So I'm like, oh yeah, that's where it pivoted. Because it's like, where did it pivot? And then a lot of the times I'm scrolling back, and then I got to scroll back. And this is just making it more efficient. More noisy, more colorful. Yeah. Again, most of what I'm doing are these gap jumps and profile plays. There's other stuff too, but like compression at the downside. Wow, this is great. Would you look at getting into this trade at the top of the channel? I don't know, Dave. What is See, that's one thing that you guys continuously ask is like, what are you gonna do? It's like I don't know until I see the price action. Because remember what I said is RTH trumps everything else. Until we see the open, because everybody's trying to stuff shit in. It could set up in the overnight. Then what? Then it's not there. It could set up at the end of the day. It could be right as the market is opening. It could be midday. We don't fucking know. So first and foremost, when is it going to set up? And second, what are the other markets doing? Russell could be fucking breaking lower and just puking. And that could just cause problems. So until we're at the threshold, until we're right up on this area, there could be a million ways I attack it. I could attempt this gap and then it fails. Maybe we approach this gap and not everything looks good. Now I got to wait. Maybe we approach the gap and everything is aligning. Then I can go for it. Maybe I need to get in a bit later and hit this stop run. Maybe everything's aligning at that stop run, so that gives me a better attempt to push it. I don't know what to do until we get there because the scenarios are unlimited. Because what does that price action look like? If there's a range right below this gap and it's banging between these two yellow boxes, then I know the gap's not going to work that well. I may try to get in and then I take a loss or whatever, or get beat up, and it's like, well, fuck, now it's ranging down here. Maybe it doesn't. How do we get into it? Really depends what is the ping-ponging of the market right on the cuspice of the areas that I want to start getting into. Hence, you trade areas, not lines for the most part. There's times where you can trade the line. So there's so much we're to fuck down here. Like, what is going on here? And whatever happens in the overnight and all in between here and up there, what's being pivoted, what's not being pivoted, where are we chopping, where's there a shitload of support and resistance, are we creating more profiles? Because if we really create a profile down here for days and days, well, fuck, if that profile finally starts to break out, then there's a higher probability it's going to continue to sustain that push, and then I'd be more inclined to just putting it in and then letting a stop get hit instead of being tight. So there's just a trillion fucking ways to like do it. What does the price action look like before we make that decision? No stream, I won't be here. What's my mid roll is going to be mid roll can be many things. Here's a profile. If the price action goes to the midpoint of the profile and rolls, it's a mid roll. Here's our gap. If price action goes to the midpoint of the gap and rolls, it's a mid roll. Or if it goes beyond it a little bit, same thing here. I'm not gonna say 3/4 roll. It's just, at that point, it's like, if there's actual ranging, and then we go wherever, and then come back to the middle of that range, and then pivot, it's a mid roll. If we have a curve and we're looking at the value zone and it comes to the middle of that, we kind of did that. That's a mid roll. If we have the 3-year composite, here's the 3-year composite. There's a very high node here. There's a high node here, and there's a clearly high node here. If price comes up to that POC and pivots, it's a mid roll. And then we pivot that And then if we do that, then it rolled here, there's a good chance it'll blow out. So a mid-roll is used for contextual queuing. And when we mid-roll something, there's a video I did on YouTube. What was it? It was after the expected value video. I think it was like an A+ trade video, actually. There were 2 mid rolls, and I talk about in that video. I actually want to know which one it is. I can find it real fast. This has a great example with the trade being talked about. Give me a second. Yeah, it's called A+. How I find A+ trades. It would be this one. There's 2 mid rolls, so that makes the expected value higher. So if it mid pivots, it shouldn't mid pivot again. So therefore, it should go through. So if it mid pivots a profile, that's why I said within Q. Here's that white area, or this one up here. Sure, you have a channel. If it mid pivots, this POC or whatever, it pivots that, or just mids the white box and comes out. That makes the trade that much better. So when it comes back in, it will most likely definitely shoot across. So that'll give me more confidence to potentially hold longer. So, oh, that's ES. Same thing with ES. ES actually looks very, very familiar to NQ. It also has a channel and a value zone in roughly the same area. And a cluster of stop runs. But this gap, EV2 gap as well. NQ is a little different. They look similar. This gap up here doesn't have any EV. Oh, wait, it's an EV3. Whereas that's an EV2 gap. Very similar shit. NQ on the right, ES on the left. They're very similar from this region up, from here up. That's always not the case, though, because if we go lower down here, it's different. This white box doesn't exist here. This value zone is overlapping this gap, whereas this value zone is in the gap. So they do get different. What is Russell going to do is really the defining factor, because Russell does not do this similarity bullshit. It will not put in some of the same looking moves. So what is that going to do? So yeah, mid pivot is used just for contextual queuing. If I think the market is going to go up and there's no mid pivot, I'm not as confident as I would be if there was a mid pivot. So hypothetically, a mid pivot makes the expected value of the move better. That's why when I label shit, it says mid roll. So I'm like, okay, that has mid roll. And if it mid rolled twice, there's a really good chance it's going to go, and it's going to go further than I originally intended. So if there's no mid roll, it may just hit a lower target. If there's a mid roll, it could go a little further. If there's 2 mid rolls, then it should move even further. So it allows me to gauge how much better the trade's going to work, and it could potentially push further. Main reversion also? What do you mean? So yeah, I mean, well, yeah, a lot of that's the thing. A mid roll is essentially the middle of a mean. They could be a gap is different because the gap isn't a mean; it's a low node section, and the reason gaps are good is because the market, it's low node section, it's less popular prices, therefore it should go all the way through. However, gaps do get turned into means at times. The reason I'm looking at a mid roll on a gap is because it didn't reach target. And there's just a better chance it should. And a lot of the larger, wider gaps tend to mid roll before they finally set up. Whereas in the other examples I showed you, a mid roll on a profile, it's pivoting in the middle of the mean. And that could be a stop run, you know what I'm saying? Or it's pivoting in the middle of a range, or it's, you know, pivoting a high node on the 3-year. There's a good chance that we're going to mean revert. And since we're mean reverting and it already stopped hard on a dime on that middle section, there's a good chance it's not going to do that again. Those are one of those statistics that is pretty high as well. Anything can happen though, you know, there's just times of randomness. Okay, thanks, FC. Going over potential scenarios was very informative. Since I've been watching you have really refined your setups. Dave, you've been here for a while. It is essentially the same shit. It's the way the trading is, it's for me, it's like the equivalent of like Porsche. Porsche looks the same since the 50s or late 40s, right? It has that same bubbly shape. And if you look at it every fucking year, it's slowly morphed into what it is today. And if you look at the current Porsche to the first Porsche, they look completely fucking different, but you can see the essence of what it was in the beginning. However, if you look at it in a chronological timeline, you can see the subtle morphing into what it became today. Same thing. And if when you're staring at it, how are you not going to get better and refine your shit when you look at it year after year? How do you just not continue to get better? You know, it's a skill set. There's just no point where it's like, I have this thing, here it is, done. No, and it never gets refined, and you just trade that. For me, that's doesn't seem to work. For me, it's like, how do I keep making it better? And the more you stare at it, the more you start to understand things, and I don't know. And the more it's like, whoa. Am I correct in saying that you have replaced using CVAs with 240-minute profiles? I think I know, but can you go over how you build a 240 and create multiple ones? Do you combine them like you did in the past? With a 50% overlap rule. Yeah. Do I have a 240? It's simple. It's the same thing. It's the same way I build them on a 30-second chart. It is the same. Hold on. Okay. Let me save real quick because I don't want to fuck this shit up. Actually, let's use Russell because so auction market theory does not care about time. Auction market theory does not care about time. It does. We find value, we break value, we go back to prior value, or we find new value. And then we stay there, break it, go to prior value. It's just how it's been. So price action is the most important thing. There's a range down here. If there is a range here, that is value. Rearranging here, this is a 240-minute chart on Russell. So I can just visually see with my eyeballs, there's value here. Hell, there's value there too. So look, what I want to do is just draw a profile. See how the curve looks like shit? It doesn't look good. So pull it in. Still doesn't look good. Pull it in. Now it looks like a curve. I need a curve to look like a curve. But also I want to just draw a curve on this chopping too, because that's the value zone. This range. This range. By the way, this high noted area was here on the 3-year when this set up and decided to rack around it. That's just a side note. There's the curve. There's the value zone. It is chopping there. That is a good range. And that is a decent looking curve for how many days it expands. It's a marriage. I call it a Hollywood marriage, right? Does the range look good? And does the curve look good? And when you put them together, you have a Hollywood couple because they're pretty, like Brad Pitt and Jennifer Aniston, right? If I have good price action, but the curve looks like shit, there could be problems. If I have a good looking curve, however, the price action is shitty, that could be a problem. I want the ranging to look like a range, and I want the curve to look like a curve. So first things first, where is there good ranging? And then look, eventually we hit it and then almost hit target. Sure, it bounces out. Sometimes close enough is good enough. Again, this curve is not super duper perfect, but they clear it. And then as soon as it goes through and finally hits target, like it got pretty close, so we keep it. And then when it comes in, they hit target. And then at this point, since it got that close, I know that they could overshoot it. So delete it. So it's gone. It got traded. Okay. Interestingly enough, though, they're still trading here. So notice I draw this curve from roughly here to the end of the day, almost. I need to cut some of that tail off because the distribution zone, the distribution curve is down here. It's not up there. And if I have it up here, then these value zones are wrong. So bring this in to right where roughly where the top of the range starts, you know? And then at this point, there's the value zone. So now we have a value zone, a multi-day value zone. See how I gave it an EV1? It had pulled back the top of it. A lot of time, huge push up, massive pullback. It didn't touch it to the tick. It's fine. It's all right. Somebody's got a hot mic. Check. Who's got the hot mic? So I'm counting that as a pullback, even though it wasn't to the tick. So for me, that's good. So there's a chance it could go through. There's a curve up here as well. Same thing. Look at the ranging. Spanning multiple days. EV3 plus, not quite a mid roll, but it's been tested 3 times. Problem though is this in its own right is a curve. So since it's ranging under it, it's going to cause problems getting into it. This is just one of those nuances. So therefore, you're getting abusive testing on this prior curve. However, at some point, this prior curve should go. We may need to come out of this one, and then if we come out of this one and finally hit this one, it could combo through both. Or it could get stuck between them and start compressing. At that point, it becomes a little more difficult to deal with. I'm not going to draw a curve here since it's still building value, and that curve is going to move around. The value zones are going to move around. This curve down here is done. It cannot be built any further. This curve up here is done. It cannot be built any further. So the value zones aren't moving up and down like it would here. Russell is probably, let's see. I do want to keep track of what is happening on Russell in, let's see, is Russell 10-minute right here? Yes. Here's Russell 10-minute. Here's that upper area with EV3. Now we kind of go down time frame. Russell's very fractal, and I talk about this in the Friday prep. There's a smaller curve in this larger curve that occurred up here. Now we have a curve down here. Price action's okay. This is where we're currently trading at. So hypothetically, oh shit. I'm moving things. See, it doesn't have a white box because this value zone still be constructed. The price action looks okay. The curve looks like shit. So if it comes out of this and that I wouldn't really want to leverage that, then you have another micro curve down here. Oh, yeah, there's a micro curve down there. You got to kind of overlay the higher time frame with it. And then you can go down smaller time frames if you wanted to. And it's the same concept. Like this is a 10-minute chart. Where's the ranging? Draw the curve there. It really is that simple. And I like doing that because, again, auction market theory does not care about time. Value zones will set up at random time intervals. This is why I don't like this is why I've abandoned my daily profiles chart. I don't use this anymore. It was running just strictly RTH and ETH. The problem is a lot of the time I was combining shit. And I'm combining it because of price action. So therefore, fuck this shit. Because it's fragmentating these value zones. And you're not really seeing what the bigger picture is. So for me, it just makes sense to just draw all of the profiles on every time frame by hand where I think a value zone is, instead of letting these fucking curves be dictated by time. Makes sense? Dave?
Yeah, FatCat, it does. I was just wondering, remember when you used to combine PVAs to create a CVA and you had that 50% overlap rule that you would use to combine them? Is that what you would look at doing with those, like when you had the Russell and you had the various zones? If they actually overlap a little bit, would you look at combining two of them into a larger zone?
I know exactly what you're talking about. That's a Nadro rule set. Yes, they get combined. I know what you're talking about. If the price action looks good, then we just, hypothetically they get combined. But really, I'm just drawing a new profile.
Okay.
Which is combining. If the price action still looks rangy, because when back then the combining of that 50% rule, the overlap, the combining was because they're overlapping, right?
Yes.
Well,
and they had
zoom out
and
look at that price action. The reason you're combining is because of that price action. The price action is still ranging. Sure, it put in a curve at first, and then it puts in another one, and they overlap. However, if you take a step back, I guarantee it's going to be a giant range. Still.
Right. Then you just combine those two areas into just.
And it's not even really combining it. It's just redrawing the profile.
Yeah, exactly.
Which is combining.
Yeah.
So yes, it is. I don't look at a 50% rule anymore. It's more so, what does the price action look like? Does it look like it's a range still? So look at the price bars. Does it look like a range? Then draw the curve.
Got it.
I think a lot of people they don't. Price action is why a curve is a curve. Price action is why a curve looks like a curve. A curve doesn't magically appear unless you're looking at TPO. That's just time every 30 minutes. That does not account actual volume traded, right? So a curve is a combination of two things. Overlap, right? Over time. That's why a TPO can have a curve shape. So as we keep going back and forth, statistically, we cross the middle more than the outer edges. So that's going to make the curve have a bump in the middle. And then at times, more volume will start to notice that and trade there. So the volume, sometimes you can have the point of control in a weird spot on a curve, even though that's not where it crosses most of the time. So price action is why a curve looks like a curve. And I've noticed the better the price action, the better looking the curve. The better looking the curve, the cleaner the trade. So yes, it's still an overlap as you combine it. Because there's times where, and that's the thing, like if we look at, okay, look, here's the Russell 120. This is where we're at now. There's a curve here. And it could be one giant curve. So let's take a look. So there is a giant curve here. It looks good. The problem is it's still being built. So it's not a PVA. It's not a prior value area. It's current. So these value zones are going to move. Now, if we cut it up into a smaller chunk.
Here's a good example. So if this overlapped, let's say that other area right above it from before, that overlap now 50% because we had all this time where it traded well below it. So if you combine all that curve from that,
I see what you're saying.
Yeah. Would you?
If this was hypothetically higher up and it was 50, no, because of what happened down here. Because then you have two distribution curves. Think about it. That is its own curve down there.
Yep.
If it had done it over here, so if we had a curve here and had done it over here before it puked, yeah, sure, we'll mesh it. But since there's a massive curve between here and here, no.
You won't mesh them. Okay. No, that was a.
I can't mesh them because if I drag the curve over to get that price action, I know what you're saying.
Oh no, then you would just take like the bottom line of the rightmost curve and the top line of the leftmost curve and just make it a wider area.
It's not like that anymore. I know what you're talking about. Yeah, no, we don't. I don't do that anymore. because those were TPO principles that I try to apply to volume profile, and it's not. This will always be its own curve until it gets traded through. At this point,
Got it.
this point, this curve is going to stay down here. Now, what could happen is it could come up in here and start chopping in this prior value zone and stay up here and then come down here, and then eventually this could turn into one large range, and then I could drag it out. Here's what's interesting though is if we here's the current curve. This is the highest time frame. But then we go down to a 10-minute. This is that same price action, by the way. Same price action. Okay, so here, let's drag this over. So from here over is from here over. There's more smaller curves within it. So it is one large curve. However, since this is still in development, it's not prior. So therefore the value zones are moving, so it's not reliable enough to trade. Now it is a range, so hypothetically we should keep mean reverting to the center point. Now there are micro curves within it. And these aren't just micro curves, these are curves that span many hours. There's one here. Good looking curve, prior value. So we could leverage that to go up. It could trade through there. The problem with this curve though is it's right above the midpoint of this broader range. So I'm not really I don't fancy longing it there. I'd be more interested in the one up here. Micro curve, and it's in a bigger value zone. Russell's interesting because it's very fractal, where it's putting in smaller curves in the larger picture. Russell is very much a curvy market. And then you have one down here. I think these outer edges ones are a little better because in the end, you're trying to break that center point. And this is a little too close to the overall range center point that I don't know how well it will be going through there. And it has 0 EV on it. This is when things become very nuanced. There's key support and resistance I've been watching down here. This has been tested 4 times. Also, Russell is very abusive and over abuses testing areas, unlike ES and NQ. So you tend to get way higher EV counts in Russell, is what I've noticed. You got a mid roll there too. I don't think I mentioned it on that, but or test essentially with about a mid roll. So that's breaking it down further on a smaller time frame. This 3-year is really goofy too. This is gonna not only are we looking at this higher time frame range, we're looking at these lower time frame shits, but then it goes into the 3-year. Like how's this 3-year going to influence this? Because it will. For instance, it was not getting up through this section, which was a higher noted cluster on the 3-year at that time. You don't actually, let's see. Mid-roll makes sense for down channeling too with adding EV. You don't actually use RIF VWAP or high time frame VWAPs anymore. I started anchoring VWAPs intraday. I started to get on for a while. I started anchoring VWAPs to a sessions high and a sessions low. I still have the RTH VWAP on my Jigsaw DOM. I'll use it as a target. VWAP bands were always used more so as targets or an extra layer of, oh, it's pivoting on first deviation. VWAP bands always had to fit the criteria of everything I've been explaining with you. If I'm looking for a pivot somewhere based off of these gaps and 3-year profile structure, VWAP bands were always like, oh, it's there too. Great. If not, whatever. And it was always used as a target in certain circumstances. Never was it used as a sole decision. It had years ago, and it never worked that well. Never used as the only reason to get into a trade because it just happens to be there. I think they're great, but at some point there's too much going on, and I think correlations are way better. There's more bang for buck. So if I'm going to be clogging my charts up with lines, I like to look at VWAP bands at the end of the day. On the moonshot video, VWAP bands were very much in play for that trade. I just like to put them up at the end of the day and just how has it been rotating it, and just kind of look at it like support resistance. You guys probably remember how I used to track shit. I would use these yellow lines or red lines and just start marking out like that. That's how it's been for a long time. Now it seems to just be a little better to throw out horizontal lines, which makes it more noisy. But I like having the labels on the right because then I don't have to keep scrolling back to go, oh yeah. Because there'd be a lot of times where I use these little lines like this, and then many days later we would come in a zone and I'd be like, oh, it ran. Why? Oh, I marked it up. Oh, I fucking missed it. So now it's like I use the horizontal lines or raise. I love VWAP. I think ETH is amazing. I think the RTH session is great. I love anchoring them, the highs and lows. Just again, at this point, it's like I get more bang for the buck with correlations, and that's taking up a shitload of real estate, and it just makes sense. What's giving me more performance, and it's a trade-off. Delta is really great too. I like Delta as well, but at some point it's just it's too much, and then when it becomes too much, you start fucking up. So I prefer to look at the bands at the end of the day because I've noticed over time that sets you up for the next day. Same thing with what I've been showing you, like, hey, NQ could hit all these combo trades, right? That's all prior day shit. Like all the really good big ass trades are things that have happened in prior days. Just letting go. This is why I tell you guys when the market is just ripping and running, I don't have edge in that. It's when it's failed and shit all over itself and chopped. That is where the edge is for me. And that's where, hey, you put it together and this is where they could puke. This is where we could get a lot of momentum going. when the market is just ripping one direction and I'm not in it and it just keeps going into a new territory, it's just I don't trade that good. So same thing with VWAP bands. I like to just toggle them on, look at them at the end of the day. And if I notice VWAP is really being abused or something, let's mark that out. Yeah, I can put chart 4.0 in the templates section for anybody who is watching this on YouTube. Go to the Discord. Go to this template section. I will put 4.0 in there. We'll get rid of 3. So I'll stick it in there. No, I'm not back already. I'm just here for now. Because Harvey wanted me to do Q&A. What else do we have? Would you take those mean reversion trades outside the value at the edges? Are you talking about... Oh, these? Like on the 10-minute? Not at this point, because this has been tested 4 fucking times, so that would be a short. I'm really... And then you have... I'm really more short biased, so yeah, I'm taking the trade. I'm not trying to get it. I think at this point, I think it's going to go up. I think it's going to break out. Let's just put it that way. I think Russell is going to break out as soon as it gets to one of these edges. What is NQ and ES going to do? And I'm not trading Russell or NQ at this time. I'm fucking around with NQ a little bit. I'm using these setups to get into ES. So, I'm looking at something else on ES, and it's like, well, if Russell's going to break out here, ES better be on a breakout as well. You know what I mean? Or if I think ES is about to break up, and then Russell. So Russell, I've attempted to fuck with, and I don't know it well enough. I don't know the ebb and flow well enough to time it. I'm starting to get a feel for these things on the order flow. Russell's a goofy order flow, and it is very weird. It's not the same. NQ is mostly a reclaimy slip style of market. So I'm not going to take those trades in Russell. As I stare at this more and more and gain more confidence in how the order flow ebbs and flows, I'll experiment with it a little bit. I'm more leaning towards the side of NQ because NQ is putting in some stellar setups at times where they're almost like no-brainers. Yeah, I definitely am interested in these edges, especially at what's happening at this point in time. Yeah, look, you have EV3 Plus and an EV1. So that's good. Then you got an EV4 down here. So absolutely. And it's on the edges. This profile, I'm not interested in. Even though I think it needs to go from bottom side up. It's just... That might give me a little oomph if the ES and NQ are setting up. But if I was trading Russell standalone, I don't want to trade this profile because it's too much closer to the mid-range at this point. Interestingly enough, though, most of the price action has been on the lower half especially here and here and here. Like if we were to take this range and fold it in half, most of the price action is on the lower half. And I've talked about this in the past is when this is how I catch really nut longs is like if most of the price action is on one side or the other, when it finally goes to the other side, it should keep going. We need bottom ticks and all that other bullshit, which we have. What's going to happen is it's probably going to come through here, clear this out. There's a huge reclaim on the left. So if it clears this, it could keep dumping. Who knows? This high node may catch it on the 3-year. A little bit because it did clean sweep it. Look, see how that high node held right there? And by the way, this looked like this at that time. At the time of this price action and this price action, that looked that way. So since it cleanly swept it, I think there's going to be drama there if it blows through here. I think if it blows through here, because it has an EV4, there's a reclaim, I think there's a good chance it'll overshoot to this. What is ES and NQ doing? I will plan on shooting it today. Is that everybody's questions on a 2.5-hour stream?
Hey, FatCat, you asked, can I ask one more quick one? What do you actually look at while you're trading? I know you have the 3 DOMs up, and do you have the 10-minute with the 3-year profile for each one of the instruments? And what about like the 3-second chart you used to use for ES? It just seems like that's just way too much now to look at. So just wondering what it is that you concentrate on while you're trading.
It's going to be too much for you. So here to understand what's happening here is like I've looked at ES for so long that I can look at the DOM, the auction vista, in multiple time frames in my sleep, right? I know these setups. I can do it almost automated in ES. Like it's not taking up too much mental capacity. Russell and NQ do exactly the same things. So it's not like I'm looking at these other markets and it's like it's not like I'm looking at new information. It's the same information that I've been looking at all this time. It's just different markets. So therefore it's just keeping track of more of the same. So it's not like if I was adding deltas and VWAPs and all this other shit, then it becomes overload because I'm not super solid with like a delta tool or some bullshit. So it's the same setups. Also, I traded bonds for a long time, and back then I was looking at ZN, ZB, ZF, UB, TN, ES. So I would look at 6 DOMs at once. If you remember my old video, how to read a DOM, there were about 6 DOMs up. So I spent a fair amount of time looking at several DOMs at once. No charts. That skill set is still there. And I can look at ES DOM, and it just like, I have such a connection with it that having more DOMs up doesn't overload me. And I think having prior experience with looking at a shitload of DOMs and learning how to keep track of them, I think that helped substantially, which is kind of funny thinking about it. So the way I look at it is if I have no fucking clue what's happening, we're going to leave the 10 minutes up. So you're going to have the ES 10-minute on the left. You'll have the NQ 10-minute on the right. I will have them all zoomed out. And then on the left screen, you have the Russell 10-minute blown up. So you have this screen you're looking at splitting NQ and ES, and then on the left screen, Russell is on the 10-minute. And I'm waiting for very specific areas to get hit. There might be times where I just sit here for hours and nothing's happening. Then on the lower screen is the 3 DOMs and then the 3-second auction vista. However, the 3-second auction vista is now on NQ, not ES, because there's no volatility in ES. ES has virtually it doesn't have the volatility that it once had. So the 3-second is almost useless because it gets stuck in these 4-tick ranges constantly. Whereas the NQ is moving, so slipping is happening in NQ. It's hitting a lot of reclaims. NQ, in my opinion, moves like ES on FOMC. So a lot of the times NQ is actually a 1 second because of how volatile it moves. So Russell, ES DOM, NQ DOM, and then NQ auction vista. Once we start to approach an area where, so I'm going to stare at all this shit, and then I need to it takes some time to get to feel the pulse of the market. So I need to sit here and feel the pulse of the market. For me, order flow is feeling the market. Are we skittish? Are we not skittish? Are we overly absorby? Are we getting hung up? Those of you that are Dom boys in here, that have been doing this for a while, you guys know exactly what I'm talking about. There's a feel to it. I can't explain. It's a feel where you feel it. So I need to feel the market. And then I'm looking at the 10-minute charts. How is this moving? How are they flowing? What's happening? And then because if I don't sink in, I will make mistakes. Then I get sunk in, and then it's like, okay, now we're approaching a gap. We're approaching a gap on the 10 minutes. Because this has been a problem, because I've done quite a few report cards in the recent month or two. And what I noticed I had a reoccurring problem was I was too zoomed in. So now I've made it a habit to just stare at the 10 minutes until we are approaching something like that's a setup. And then I'll bring them all up to 30 seconds. So it'll look like this. NQ 30 second over here. And then ES 30 second over here. And then we'll bring up the Russell 30 second on the left screen. Sometimes I might need Russell to stay on the 10. Sometimes ES needs to be on the 10, and I'll start flopping between 30 second to 10s on some of them. But for me right now, NQ is the most important one. NQ, for the most part, is always on the 30-second chart. Because NQ's putting in bigger ranges where ES can just go sideways. So therefore, I want to time like a mean revert or the top of a top tick on NQ with ES, since there's no volatility in ES. And I'm looking for the same entries I would on ES on NQ that I've always looked at using Auction Vista on the 30 second. So I'm looking at NQ the same way I would look at ES. And since there's more volatility, I can kind of pinpoint and get more of a precise entry leveraging NQ, especially since ES is very flat these days. Because ES could be really not doing shit, but NQ's putting in this beautiful range, and then it bottom ticks NQ, and it's like, okay. And we're also at the bottom of a bullshit range in ES. They're sunk. Let's hit it. You know what I mean? So then we're looking at the DOMs. A lot of the times I'll mark out on the DOM. So see this EV gap at 43 even? I'll put an arrow and write gap on the DOM on ES. And then I'll take the value area. I'll mark it on the DOM. I'll take anything that I think is like critical information, like these levels, and just mark them on the ES DOM. Then I'll go to the NQ DOM and mark these levels as well. And then I'll go to the Russell DOM and mark the levels. So now I don't really need to be staring at the levels on the charts because they're now marked on the DOMs. And the DOMs only take up half the screen. They go from here to here. All three of them. So Russell is here, ES is here. So they're only taking up half of a screen width. And since the levels are being marked on the DOM, it's just easier to see it all. It's a smaller real estate on the screen. This goes to the strike zoning video. This is like strike zoning 2.0. So all three DOMs are there. The levels are marked. So I can see, oh, Russell's jumping the gap. I don't need to look at the chart because I can see that, hey, there's the start of the gap on the DOM. The target's down here. Same thing with ES and Russell, and they're NQ, and they're all moving up and down. Because in the end, markets only go up and down. All that sideways shit is old price action. Still relevant and important. But when it comes to getting into the trade, I've made things more efficient for my brain and my eyes. My eyes don't have to travel from this screen to this screen to this screen because now everything's marked on the DOMs. So when it comes time to executing, we watch the market, how they flowing. Yeah, I want to be checking, the charts. It's because sometimes you get too zoned in on the micro and then you overfight. So it's a good habit to keep checking bigger picture shit. So that way you can be like, whoa, this ain't working. So it's all on the DOM. My eyes don't have to travel as far, so I can see the levels and they're all close. Because, look, there's a gap here at what price is that? 24.50. Okay, and then there's a gap at 43 even. Okay, wait, what was this one again? 24.50. What was this again? 43 even. Okay. However, when it's on the DOM, it's there and it's just really easy to identify. There's an arrow next to the price. It's easier to read. It's vertical and it's just so much fucking easier. So it is literally the same thing, just in two different markets. So since I'm looking at the same shit that I've been trading year after year after year, it's not new information. So therefore I'm not confused on how NQ and Russell are moving. It's like, this makes sense. It's just, I'm looking at more setups now. I'm looking at more of what I know really well. That's already a system in my brain. Does that make sense? I don't know. I'm going to show an actual recorded session with all three DOMs at some point. So, anything else, guys? Okay, this is pretty long. I think that's it. We'll see what. That was a lot of good fucking information too. So. There is a trans track buried somewhere in here. Yeah, well, I'll probably do more of these in the future. Just I won't be here. I'm gonna leave because being alone helps. And then see how this went for 2.5 hours. Luckily today we have the time to do, and it'll make a great YouTube video. Yeah, I'm gonna upload it. So I'm gonna jump off now. All right, see you guys.